Financial access. I now recognize myself for 5 minutes to give an opening statement. I would like to welcome the Prime Minister of Barbados, the Honorable Mia Amor Mottley, to the Financial Services Committee and thank her for being here to discuss an issue that I've long dedicated my time to solving, the crisis of bank de-risking in the Caribbean. By appearing here today, Prime Minister Mottley is giving voice to a topic that matters to every person in the Caribbean and, as we'll discuss, everyone in the United States too. Today's testimony by Prime Minister Mottley isn't just timely, it's historic. It marks the first time in nearly 40 years that a Prime Minister will testify before Congress. Her presence today underscores the gravity of this issue and the urgent need to take serious steps to end the deterioration of global financial access for her nation and the whole of the region. Prime Minister Mottley, I'm so pleased to welcome you to the United States and look forward to hearing your testimony and listening to the ways we can all work together to reverse de-risking. I'm also pleased to acknowledge Dr. Keith Rowley, the Prime Minister of Trinidad and Tobago. Thank you, Mr. Prime Minister, for joining us to lend your support. For too long, the lack of financial access faced by Caribbean nations and their majority Black populations has been blatantly ignored. As chairwoman of the committee, and even long before I assumed the chair, I've worked with stakeholders to combat the de-risking we've seen harm businesses and families across the Caribbean and the United States for more than 10 years. Financial access is key to a nation's stability, but for our neighbor island nations, whose economies rely on cross-border transactions, they're being denied this path to prosperity and resiliency. The Caribbean is very close to the United States, not only in geography, but also in its shared economy, culture, and security. This is reflected in the mutual trade and tourism, which fuel jobs and economic growth here and in the region, as well as in the 8.5 million members of the Caribbean diaspora community who have chosen the United States as their home. We must acknowledge that our nation's security and well-being is directly linked to that of the Caribbean nations, and that dwindling financial access endangers these mutual benefits. So that's why back in April, Prime Minister Mottley and I led the Caribbean Financial Access Roundtable with nearly a dozen heads of state, members of Congress, and other stakeholders to discuss concrete solutions. In addition, my committee worked to secure key anti-money laundering provisions in the 2021 National Defense Authorization Act, including a mandate for a United States government-wide strategy to address financial de-risking. Without action on this issue, we risk ceding our leadership in this region to countries like China and Russia, which have been working hard in recent years to become more active in the Caribbean. It's clear that combating the loss of United States correspondent banking relationships in the Caribbean should be a mutual priority for both the Caribbean and the United States. Solving this crisis requires us to work together, from government examiners to correspondent banks and civil society organizations to international financial institutions and standard-setting organizations. Congress has a role too. Under my leadership, the committee continues to press for action on the collaborative solutions needed. Solutions like removing any unsubstantiated stigma of the region in government reports and helping streamline bank examinations, to name a few. Now's the time to move on these measures. Thank you, and I now recognize the ranking member of this committee, the chairman from North Carolina, Mr. McHenry, for 5 minutes.
Well, thank you, Madam Chair, and Prime Minister, thank you for being here. It's an honor to have you before our committee. And Madam Chair, thank you for having this hearing. De-risking is a critical issue. And the last time we talked about de-risking in a full committee, in a committee hearing was back in 2008, but that was domestic de-risking. And that was led by the subcommittee ranking member, then chair of the Financial Institution Subcommittee, and it was analyzing the impact of Operation Chokepoint in the then Obama administration, and the impact that Operation Chokepoint had on consumers, small businesses, and communities. But that was a domestic look. Today, we're looking at the global landscape and the implications of de-risking at a macro level, and that's important. But those issues are similar whether they're domestic or international. The underlying factors of de-risking remain the same between those both domestic and international functions. And overly punitive supervisory and examination tactics employed by federal financial regulators can have serious implications. Take, for example, availability of banking services in jurisdictions deemed high risk, like the Caribbean and towns along the southern U.S. border. It's one thing if de-risking is evidence-based, an evidence-based response to illicit finance. And let me be clear, we support that. And I think that is, we have bipartisan support to do that. But when innocent people and legitimate businesses are being shut off from financial services, we need to take a step back. We should re-examine our approach to ensure that we are not lumping in the good with the bad. And the problem is this. The penalty for failing to comply with anti-money laundering regulation can be so devastating for financial institutions, especially small and medium-sized banks, that they turn to defensive approaches to ensure compliance. Republicans have raised this issue numerous times in the context of suspicious activity reports, or SARs. Many banks carry out defensive SARing to ensure that they don't get penalized. In 2021 alone, this resulted in over 3 million reports generated. And I expect that we'll see a new record set every year moving forward. It's through this lens that we approach Caribbean de-risking. U.S. banks are faced with a difficult decision. Regulatory compliance costs and the penalties for non-compliance are so steep that financial institutions would rather end customer relationships than run afoul of regulators. The result is large-scale de-risking and debanking for entire geographic areas that can sweep up ordinary people and small businesses and have severe economic consequences and severe consequences for friends, allies, and neighbors. And the question of the day is this: where do those debanked customers go? And I'll tell you, China. And these are our neighbors. These are our friends. These are our traditional allies. These should be some of our closest relationships the United States has in the world. According to the report titled Financial De-Risking in the Caribbean, which was authored by one of today's witnesses on the second panel, from 2009 to 2016, Chinese correspondent banking relationships grew from 65 to 2,246. To put it in another way, over an 8-year span, China gained 2,181 new ways to engage with partners in developing regions like the Caribbean. As a matter of American policy, why are we driving people away from our friendship as a nation and seeking a country that does not adhere to our rule of law, our concept of human rights, and our struggle with human rights to improve? So think about this. Our current regime that compels banks to overfile reports to not get penalized is actually driving customers in regions that regulators deemed high risk, underperforming or worse in the financial arms of the CCP, of the Communist Chinese Party. I would argue it is in the best interest of our financial system, communities, law enforcement, and the federal government to be able to monitor and maintain these global banking relationships and friendships. I look forward to hearing from the Prime Minister today and the other witnesses on the second panel. Thank you, Madam Chair.
Thank you, Mr. McHenry. As a reminder, we will have two separate witness panels today. After the first panel concludes, we will take a very brief recess before proceeding with the second panel. The sole witness of our first panel is the Honorable Mia Amor Mottley, who is the Prime Minister of Barbados. Prime Minister Mottley is an attorney, a member of Parliament, her nation's Minister of Finance, Economic Affairs and Investment, as well as Minister of National Security and the Public Service. She is a leader in CARICOM, the Caribbean community, and one of Time Magazine's 100 most influential people for 2022. Without objection, your written statement will be made part of the record. You will have 5 minutes to present your oral testimony. You should be able to see a timer that will indicate how much time you have left. Prime Minister Mottley, you are now recognized for 5 minutes to present your oral testimony.
Thank you very much, Madam Chair and Ranking Member. Thank you for having me here. I want to acknowledge my colleague, brother, Prime Minister of Trinidad, the Honorable Keith Rowley, who is also here this morning, and appropriately so, because even though they don't have an offshore banking sector, they are the owners of 2 of the 5 banks in Barbados, and therefore have a vested interest in this issue. I want to say, especially to the Ranking Member, that you can be assured that while Barbados sent the first 7 governors to the Carolinas, I'm not here for that purpose at all today, and therefore we need not worry. But I am here to tell you who we are and what faces us when banks leave. Our reality is that we in the Caribbean community are a community of sovereign nations of 15 countries, and we have a collective GDP of 82 billion US dollars. There are 41 states in the United States of America that have a larger GDP than all 15 member states of CARICOM. It is important that we appreciate that context first. The irony is that the state that is closest to us in terms of GDP at 80 billion is the state of Delaware, but that speaks to other opportunities, I suspect, as to why Delaware and Wyoming, which is also smaller than us, have also pursued this area of financial services with the keenness that they have in recent years. We are here because we're fighting for a global public good, and we're fighting for the human rights of our citizens. This committee has already expressed its concern about financial exclusion of the American population, persons who have been excluded here. Our people are no different. When we were growing up, opening a bank account was a part of our rites of passage in becoming an adult. Today, it is now a gargantuan obstacle for us to have our people do so, given that we spend weeks and businesses come into our region, sometimes weeks and months, just to open a bank account as individuals to live and as companies to trade and do business. Our economies cannot function on their own. We do not make enough clothes, we do not produce our own food, we do not produce our own equipment, and therefore, unless we are able to trade with the rest of the world, we are at risk of becoming financial pariahs. We are here because the listing process that has taken place, whether through the Financial Action Task Force or the OECD, or further, as a result of actions taken for enhanced due diligence by those who take the listings from the FATF and the OECD, it means that those correspondent banks, over the course of the last 10 to 12 years, have made a judgment that we are simply too small, as I've just told you, in order to get involved, because the enhanced due diligence means increased costs of regulation, increased cost of compliance. And rather than do business with us, they say, thank you, but no thank you. What it has meant is that almost every country in our region over the course of the last decade, with the exception of 2 or 3, have had a loss of more than 30% of their correspondent banking relationships. The truth is that we have also seen others, the member just appropriately referred to in his opening statement, and therefore what we face is a situation that the very thing that you set out to achieve which is the avoidance of terrorism financing, the avoidance of money laundering, on which we are all agreed, is likely to happen because you're driving people underground. There is no benefit in driving our citizens underground or making our countries uncompetitive such that our economies are at risk of becoming underdeveloped or failed states. And we have now to determine whether this is capable of being a continued acceptable course of action. We have been making noise for near a decade, and we want to thank this committee for hearing us today, because that noise cannot continue. And ironically, with the technological developments that are taking place, and as recent as the issuance of the digital yuan, on which The Economist magazine wrote a column last week, there are options becoming available to countries to opt out of the SWIFT system and to find other ways of being able to transmit money to their citizens. For us in this region, it is not yet here. But given long enough, nature abhors a vacuum, and we will find a way. And why should this matter to you? This is a country of immigrants. We have as many immigrants here as do people from Africa, Asia, Europe, all over. And if you recognize that the part of the pattern of being an immigrant is that while you've come to do better, you want to send back home money to those who have not been able to make the journey. When correspondent banking relationships are removed from our people, there is no longer the luxury of being able to do so. But the love doesn't stop. You don't stop loving your family. You don't want to stop sending back the money. And therefore, you will find whatever mechanism you can to be able to do so. Similarly, our economies require not just investment from local savings, but the attraction of foreign direct investment to survive. If we cannot keep our country safe, you already know in this country the spectacle of immigration from Caribbean countries, and you already have vigorous debates about what is acceptable and what is not acceptable, sometimes in ways that cause us a little difficulty too. If we want to be true to the declaration that we signed in Los Angeles in the City of Angels 3 months ago with respect to migration, then it is important that we create conditions where our countries can benefit and where our countries can have a level playing field in order to be able to achieve prosperity for our citizens who expect education, healthcare, and opportunities for trading. We, the majority of our countries, also depend on tourism. What happens when your tourists come? What happens when your investors want to build hotels? This is the most nonsensical thing that we have seen in public policy. And why do we say that we are at risk of offending a human right and a global public good? Every citizen of the world ought to have the right to be able to have a bank account if they are to walk the streets without fear of crime, if they are to have the opportunity to save, if they are to have the opportunity to do as the capitalist system tells us we should do, to leverage our savings to be able to invest in order to grow our economy and to increase our wealth. And every country in the world ought to be able to have access to affordable banking services to fuel trade and to foster and enable remittances. And in this entirely globalized world that has come out of the bottle and can't go back in, there's no chance of putting the genie back in the bottle, what we do is force countries to find alternative means to trade. Now, the SWIFT system, sounds familiar. Why? In this committee, I'm sure you've had a lot of discussion about who should be excluded from the SWIFT banking system in this year. And we know that the attempts to keep Russia out through sanctions, as you've done with other countries, simply has treated them as pariahs, but they have found ways to trade outside of the SWIFT banking system too. And the reality also is that if you don't use this example to show you why this is an appropriate time to take different action, we will continue the injustice. And what do I mean by that? Russia didn't choose the Caribbean to hide its money. Russians didn't choose the Caribbean to hide its money. They chose the metropoles. They chose London and New York and Switzerland and Luxembourg. And you only have to do as Tom Cruise told us in that famous movie, follow the money. Follow the money. Where has the money gone? It hasn't come to the Caribbean. And what we have is listings from the Financial Action Task Force that are perhaps well-intentioned, but are focused on process and form, and are not focused on substantive prosecution of money laundering. That is the equivalent of saying that I'm more interested in whether you adhere to rules than in finding where the money launderers are. When you wanted to find the money launderers with respect to Russia, you didn't come to the Caribbean. You went to London, you went to New York, you went to Zurich, you went to Luxembourg. And I say this because there has to be a fundamental injustice in a system that puts on a list, not Luxembourg, not the United States of America, not the United Kingdom, but puts Jamaica, Trinidad, Ghana, Barbados, all of which were put on a list, not even because we were having substantive money laundering there, but because in 2020, there was a determination to change the criteria by which we assess countries, looking at the definition of money supply from M2 to M3. Now, for most of my constituents, that sounds as though we're playing a game, but that reality of changing the definition of money supply led to the listing of our countries. And what did it mean? An investor wanting to come to Barbados from Europe goes into a bank and says, I want to transfer X million dollars for an investment. The bank says, oh, Barbados, no, we have to do enhanced due diligence because they're on a list. Oh, Belize, we have to do enhanced due diligence. When that happens, they say, but guess what? The enhanced due diligence is too costly for us. You need to go and find another bank. It doesn't only happen with de-risking of institutions, it also happens with categories of business. So you have bankers saying to people who trade gold, oh, you can't bank with us anymore. Come for your millions of dollars. Where are they going to carry it? How does that enhance the opportunities for crime? How does that enhance human insecurity? People who trade in casinos. Do you believe that the owners of casinos in Las Vegas keep their money in a safe? Or do they keep it in a bank? Well, in the Caribbean and Trinidad, where the casinos, and in the rest of us, they tell the people who have casinos and slot machines, you can't bank in a bank anymore, in spite of the fact that we still have correspondent banking relationships. Why? Because to keep the remaining relationships that we have, they go overboard with the level of compliance and regulatory compliance that make us now as countries uncompetitive and make the conduct of certain businesses prohibitive. This can't be fair. And if it is not fair for your people to be excluded financially, then we say equally it is not fair for their family in the islands and in the other countries from which they come to be excluded financially. This is a global public good that we must protect, and this is a human right that we must protect. And I want to thank this committee for seeing us today, for hearing us, and for feeling us, because for too often we have not done so. The last point I'll make is this. Do not let this be recorded as an act of unconscious bias. And why do I say so? Look at the list of countries who are listed, and you see that they're almost all former colonies and people of color. And look at the countries who, in spite of being able to open a bank account within hours in Delaware or Wyoming, within hours in Luxembourg or Zurich, and they remain off of these lists that speak about the risk to money laundering, and look and see where the divide comes. I believe that this committee has a keen eye for fairness and equity. And all we ask today is for a level playing field. The final solution, we believe, one of the solutions we leave you with, is that the Treasury ought to be truthful to its mandate. It says that it wants to be risk sensitive. Well, if it wants to be risk sensitive, then it needs to focus on where the money is, rather than creating rules that act as a proxy to money laundering or terrorism financing. And it has found the answer, even if fortuitously or serendipitously this year, by following the money with the Russian sanctions. I thank you and pray that we can use both technology, communication, sharing of information, but above all else, fairness and transparency to ensure that our people are not further punished from being able to participate in their lives through their economies, through their savings, and with their families across borders and business. Thank you very much.
Thank you so very much, Prime Minister Mottley. Now, without objection, I would like to submit statements for the record from the Caribbean Community Secretariat, the Government of Antigua and Barbuda, and MoneyGram International Incorporated that echo many of the things Prime Minister Mottley stated in her testimony. I now recognize myself for 5 minutes for questions. Prime Minister Mottley, thank you again for your testimony on this vexing issue of bank de-risking. In your testimony, you explained that the international community, including the United States, tends to incorrectly perceive the volume and impact of financial crime that moves through the Caribbean as compared to other countries like Switzerland, the United Kingdom, and even the United States. The European Union has a high-profile examples of years-long anti-money laundering failures, such as Danske Bank, through which Russian oligarchs, including Russian President Putin, have laundered billions of dollars, and yet instead of looking inward, it is Caribbean nations and non-sovereign territories that the United States blacklists for money laundering or tax reporting deficiency. You have argued that such blacklists and similar reports are one reason why the Caribbean is incorrectly perceived by correspondent banks to be riskier. For example, the United States Department of State prepares an annual report with input from the listed countries called the International Narcotics Strategy and Control Report, or INSER. The purpose of this report is to describe the efforts to combat all aspects of the international drug trade, including money laundering and financial crimes. INSER is an important and useful report, but it only provides negative information about listed nations without describing their efforts to improve their ability to fight financial crime. This would seem to not provide a full picture of the actual risks that exist. That is why I propose H.R. 8798, the INSER Improvement Act, which would amend the law to require INSER to include examples of anti-money laundering improvements made in the listed countries. I believe that including such information would also be useful for the Congress in understanding the countries whose activities are being reviewed. Prime Minister Mottley, can you please comment on the efforts that international blacklists and reports like INSER have had on perception about the banking risk in the Caribbean, especially in terms of how correspondent banks incorporate that information in their risk evaluation and decisions about whether to offer services within a listed country? And specifically, can you comment on my proposal to make changes to the INSER report?
Thank you very much for that question, and it's very appropriate. The reality is, as I said, the listing has been recognized by the Bank of International Settlements as perhaps the greatest reason why correspondent banks leave and remove their relationships. And therefore, these lists are deleterious. We believe that if we can move these lists off, we are in a position to be able to at least have a better chance to make the case that the substantive concerns that we all have to fight crime are being met. The reality is that the State Department's report, once again, we've been complaining for years, is prepared by junior officers. It is not robust, it does not allow us a right of response, and it does not take into account when improvements have been made during the course of a year. This is not an exam. This is our life, and this is real for our people. So that when banks remove themselves and say they're not doing business, and an investor has a choice between a country in the Caribbean or a country elsewhere where he can seamlessly move his investments, he's going to go elsewhere. And that is why we say that these reports have a disproportionate consequence in excluding us and making us financial pariahs and making us uncompetitive. And we feel that if you can pass legislation that, one, includes a right for us to respond, and two, we live in a world of real time, so that if we have improvements, then they ought to be taken in real time, rather than waiting for the next year's report in order to take account of the improvements that have been made by countries. Why? because in that course of the year, that country can lose 5% of its economic activity, 7%, 2%, all as a result of its failure to be able to attract investment. And equally, what I haven't spoken about is the millions of dollars that we have to spend as a small state to try to satisfy those considerably larger questionnaires that exist in circumstances where we know that the money isn't in us and that it's not us where the money launderers. Money launderers are hiding their money in plain sight, but you're coming to us to give yourself a sense of comfort, and that is our concern with these lists. And secondly, when we comply with the list, what happens? The goalpost is moved, and a new list comes out with different concerns. And we've seen it whether in terms of money laundering and terrorism finance or in terms of tax transparency with the OECD. And that is why if you go back, we're continuously on these lists facing the consequences of that withdrawal. Thank you.
Thank you. I agree with you, Prime Minister. And as we heard several months ago at the roundtable in Barbados, and as we'll likely continue to hear today, the incompleteness of these international reports can have a profound impact on whether a correspondent bank decides to cut off all business to a country. I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 5 minutes for questions.
Thank you, Madam Chair, and thank you, Prime Minister, for being here. This is an important issue. But you know, in de-risking, we want to make sure that the knock-on effects of this are not so severe that we actually go against our common interests here. But the way de-risking is carried out is because of a jurisdiction or industry or an area is deemed to be high risk for money laundering. That is at least, you know, what the financial regulators will say, what these institutions that are moving out of territories will say. So my question to you is just a very direct one. What are you doing to counter that perception, or what they would say is fact, but what I think we would say is perception? What are you doing, and what is your government for your country doing to counter that perception?
Thank you. We have had to pass substantive laws to deal with these issues since 9/11. I was Attorney General when 9/11 happened. I was around when Resolution 1373 and all of those other resolutions that were passed when the U.S. Patriot Act was passed. The U.S. Patriot Act has not stopped money laundering in this country. The U.S. Patriot Act has not stopped money laundering in Europe. You've seen the evidence of it this year as you've gone after the oligarchs and as you've put sanctions on others. At the same time, our country has had to divert money away from social spending and critical infrastructure spending in order to ensure that we do not have our banks cut off from the rest of the world. And to that extent, that is why now my citizens have to face 4 weeks, 5 weeks to open a bank account as a young kid with no background of any kind of problems in any society, because you're now coming into an adulthood. Similarly, if you decided to have a company here, try to invest in Barbados, more often than not, it'll take 4 or 5 weeks to open an account. You go to Delaware, you open it up in a matter of hours, in the twinkle of an eye. You go elsewhere in Europe in the twinkle of an eye. So in spite of all of those things, we have had to spend this money just to be able, not to be level, but to come close to having a chance of having economic activity.
Well, what are you using? Are you using technology to speed that process?
We are using technology. We've just in Barbados introduced a national digital identity verification card, and that is to help us expedite the process in spite of what else we are fighting for in terms of our advocacy out here.
But you're talking about a digital identification card?
Digital identity card.
We don't have that in the United States. Explain to me what that is.
A card that helps you to validate who you are digitally, to give you access to other services so that the banks can take a chance on you in a more credible way. But that costs us millions of dollars to do. In the same way, equally, our banks are using a metric which is in fact far more rigorous than yours. You have a metric of 10,000 US for money laundering. Our metric is the equivalent of 5,000 US. So that every transaction over 5,000 US has to be able to be monitored and examined. And the bottom line is that in every instance we are doing, I say this with the Madam Chair, like women, we are doing twice as much as you to be considered half as good as you.
I've got no follow-up. Because I, in fact, know it's true, sadly, but I also know the effects, which is working twice as hard and actually are twice as good,
Yep.
perhaps more. So along those lines, you're taking active, concerted efforts to address these concerns.
Yep.
And you're working actively to do that. I think that's an important message. And I'm, Madam Chair, thank you for holding this hearing, because it does bring a big issue that we've talked about a couple Congresses ago domestically, but we need to talk about in terms of our trusted trading partners. In a complicated world, we need to make sure that our closest countries are our closest friends.
Exactly.
And we need to treat them like our closest friends. And I think for too long, we've thought of many of our neighbors to the south as great places to go visit, without thinking we need a trading relationship, not a visiting relationship. And we need to change this mentality of our closest neighbors actually deeply moored with us in our economy. And that is an exchange. That is not a one-way street, it's a two-way street. We need to make sure it's done that way. So, Madam Prime Minister, thank you for being here. Thank you for your testimony.
If I may, the reality is that we're family. And apart from being family, there are opportunities that can exist to improve your conditions and our conditions. But nothing has happened between the U.S. and the Caribbean since the passage of the Caribbean Basin Initiative Act more than 40 years ago. And if we don't create the opportunity to expand the trade, which now stands at 35 billion US dollars, with which you have a trade surplus of 12 billion US, there's far more work that can be done, far more investment that can be done. And there are issues, for example, even as we fight the issue of fertilizer, Trinidad has surplus capacity on natural gas and fertilizer, but they can't get it here because of other issues that you've resolved for Europe and you've resolved for Chevron, but not for Trinidad and Tobago. So there are a number of issues that I believe
we've got a note here. All right.
Yes.
This is also a trading relationship conversation, I see.
Yeah, it's more than trading. We're family there too.
Yes.
But basically, what really is happening is that we are not having the opportunity to do what we should be doing, trade with each other substantively, and to create and work together collaboratively to fight crime. And we have that relationship with Southern Command, we have that relationship with other agencies in this country, but it is almost as if the left hand and the right hand don't know what each other is doing. And all we're asking you to do in this committee is to bring clarity and to have a sensitization that if Treasury wants to really fight crime and fight money laundering, do not drive the transactions underground by forcing us to find alternative means to trade and to send money to each other. And whether it is a digital one or whether it is the unregulated crypto exchanges, people, or whether it is buying jewelry, people will find ways to send remittances and will find ways to continue to trade because we do not produce all that we need in order to live.
Thank you.
Thank you, Mr. McHenry. And I'd like to thank our distinguished witness for her testimony today.
Okay.
Without objection, all members will have 5 legislative days within which to submit additional written questions for the Prime Minister to the Chair, which will be forwarded to the witnesses for her response. We will now take a brief recess to bring our second panel of witnesses. Thank you very much.
Thank you very much.
The committee will come to order. I'd like to welcome our second panel of distinguished witnesses to the committee. First, we have Mr. Wazim, Mohamed, Mowla, who is Assistant Director and lead of the Caribbean Initiative at the Adrienne Arsht Latin American Center's Atlantic Council. Next, we have Ms. Wendy Delmar, who is the CEO of the Caribbean Association of Banks. Next, we have Mr. Wayne Shah, who is the Senior Vice President of Financial Institutions and the Head of Caribbean Region at Wells Fargo Bank. Mr. Shah is also the Executive Director of the Financial and International Business Association. Next, we have Mr. Amit Sharma, who is the CEO, founder, and director of FinClusive. And finally, we have Ms. Liat Shret, who is the Director of Global Policy and Regulation of Epileptic. Without objection, your written statements will be made part of the record. You will have 5 minutes to present your oral testimony. You should be able to see a timer that will indicate how much time you have left. I would ask you to be mindful of the timer so that we can be respectful of everyone's time. Mr. Mowla, you are now recognized for 5 minutes to present your oral testimony.
Good morning. Chairwoman Waters, Ranking Member McHenry, and distinguished members of the committee. It is my privilege to address you this morning on the impacts of de-risking.
Mr. Mowla, could you pull that microphone a little bit closer to you and speak directly into it?
Sorry. Good morning, Chairwoman Waters, Ranking Member McHenry, and distinguished members of the committee. It is my privilege to address you this morning on the impacts of de-risking in the Caribbean and strategies for ensuring financial access. First, I congratulate the committee for prioritizing the withdrawal of correspondent banking relations, and by virtue of holding this hearing, underscoring your commitment to addressing this issue, one that is critical to both the Caribbean and the United States. I would also like to note that it was an honor to accompany Chairwoman Waters to Barbados earlier this year and participate in the Financial Access Roundtable, in which the issue of de-risking was raised. Before I begin, I would also like to acknowledge the much-needed comments and insights from the Honorable Prime Minister Mottley of Barbados, as well the other witnesses that are joining me today, including Wendy Delmar and Wayne Shah, who are both part of the Atlantic Council's Financial Inclusion Task Force. Members of the committee, as you have heard today and will continue to hear, the withdrawal of correspondent banking relations, or de-risking, is having a significant impact on the health, functioning, and development of Caribbean economies. Financial institutions list the Caribbean as the most affected region globally, with some countries losing close to half of all correspondent banking relations over the past decade. De-risking has adverse effects on key economic sectors, including tourism, remittance flows, and access to international trade, finance, and credit. To put it simply, de-risking is effectively cutting the Caribbean off from the rest of the world, bringing any means of economic development and resilience to a halt. Because of the extreme vulnerabilities these countries face, they are in a constant state of economic survival, consistently depending on global finance to rebuild after hurricanes, to attract foreign investment into emerging industries, and whose citizens rely on the imports of food, fuel, and goods to maintain their quality of life. All of this is only possible if these countries have access to correspondent banking. And while de-risking has severe impacts in the Caribbean, the United States, its national security, and its interests are not spared. First, de-risking limits Caribbean countries' ability to access the US dollar. This presents a challenge for US agencies, as it is counterproductive to addressing money laundering concerns if businesses and individuals are forced to use alternative currencies or avenues to transact payments. Often, this can become a place for criminal networks to hide illicit flows, making it more difficult for US agencies to combat them. Here, there is a clear national security risk. Because of the Caribbean's proximity to countries that house illicit actors, such as Venezuela and Cuba, the region is then exposed to becoming a future hub for criminal financing if de-risking goes unaddressed. De-risking also limits US economic influence. US companies that are seeking to shorten supply chains and nearshore to the region are likely to face barriers if they cannot pay service and product suppliers. For companies looking to invest in emerging industries, such as the energy markets of Guyana, Trinidad and Tobago, and Suriname, correspondent banking will be vital to ensuring that the US private sector is able to compete for contracts. Further, continued de-risking and loss of access to the US dollar presents an opportunity for Caribbean governments and financial institutions to seek new or strengthen existing relationships abroad, notably with China. While Caribbean governments and people rely on the US dollar, it is not the only internationalized currency. While the euro is an alternative, Caribbean governments face similar de-risking challenges with banks in the European Union. The result is an opportunity for the Chinese RMB and its banks to strengthen ties with the region. The draw of new banks and RMB usage from China is likely to be attractive for most Caribbean countries and can even influence Taiwan's allies in the region. At present, 5 of Taiwan's 14 remaining allies are CARICOM members. Except for Haiti, these countries have each lost more than 30% of their correspondent banking counterparties since 2011. If the severity and frequency of de-risking rises in the region, this can be an added incentive for Taiwan's allies to pursue a switch in diplomatic recognition. Members of the committee, I urge you to take legislative steps to address de-risking in the Caribbean, to promote financial inclusion and safeguard U.S. interests. Never has there been more appetite for the United States and the Caribbean to expand cooperation and strengthen their partnership, but doing so will require tangible and decisive action. The Inkster Improvement Act is one such example, which will help Caribbean financial actors and government leaders annually underscore actions taken to address money laundering, drug trafficking, and financial crimes. And the Caribbean Stakeholders Engagement Act is another, which will ensure that those that are most affected by de-risking have a seat at the table. Members of the committee, I speak to you today as a Caribbean American, someone who has a vested interest in the well-being, prosperity, and security of both the Caribbean and the United States. And I can clearly and sincerely state that correspondent banking underpins the core of the U.S.-Caribbean economic relationship. It has an impact, not just on Caribbean citizens, but U.S. citizens as well. Taking action today and in the future can ensure that we, as neighbors, as Americans and Caribbean citizens, can build a future that is safe and prosperous for everyone. Thank you, once again, for the honor and opportunity to appear before the committee today. I look forward to answering your questions.
Thank you. Next, we have Ms. Wendy Delmar, who is the CEO of the Caribbean Association of Banks.
Chairwoman Waters, Ranking Member McHenry, other distinguished members of the committee, good morning. I am honored for the opportunity to shed light on a matter that may be deemed the proverbial thorn in the side for banks and financial institutions in the Caribbean. As a Caribbean national and career banker, the onslaught of de-risking activity and its resultant adverse impact on the banking industry and economies of the region has been both disheartening and deeply concerning. As Chief Executive Officer of the Caribbean Association of Banks, I am proud to state that the CAB was the first regional organization to sound the alarm as early as 2015 relating to de-risking activity in the Caribbean. Since then, we have worked assiduously to bring to the forefront the challenges faced by the region resulting from the loss of correspondent banking relationships, while concurrently striving to identify and execute possible solutions. It is agreed that prior to the increase in regulatory requirements aimed at addressing money laundering and the financing of terrorism, banks and other financial institutions within the Caribbean enjoyed mutually beneficial correspondent banking relationships with the United States correspondent banks. However, as noted by Ian D'Souza in 2017 in a research paper commissioned by the CAB on the unintended consequences of de-risking, the scaling up of efforts related to anti-money laundering and combating the financing of terrorism ultimately resulted in a deteriorated cost-benefit position for the business of Caribbean banks and other financial institutions. Yet regrettably and quite candidly, the current arrangements through which the international financial system has chosen to relate to Caribbean banks and other financial institutions has rendered the region disproportionately dependent on correspondent banking services, thereby exacerbating the adverse effects of de-risking. In my written submission, I have developed the foremost areas of concern related to the matter. Noting, however, the time restrictions for this morning's hearing, I will provide a brief summary. The Caribbean is comprised primarily of small island developing states. As such, foreign direct investment is significant to the gross domestic product of Caribbean economies. De-risking perpetuates the perception of the region as high risk, which negatively impacts investor appetite. The likely resultant decline in FDI is a multiplicity of ramifications from the macro to microeconomic levels. Moreover, access to international financial markets is paramount for Caribbean jurisdictions, given that most countries are in fact net importers. Therefore, the availability and access to goods, from grocery store items to vehicles, is dependent on well-functioning correspondent banking relationships. At the height of de-risking activity, Belize, for example, lost nearly all correspondent banking relationships, wire transfer services, the processing of credit card payments, and the clearing of checks issued by United States banks were unavailable. In a jurisdiction heavily dependent on tourism, the ramifications of the previous were dire. Additionally, banks and other financial institutions within the Caribbean continue to contend with significant increases in operational costs, driven almost primarily by compliance initiatives. This is representative of one of the most deleterious unintended consequences of de-risking, which is the burden inadvertently placed on all banks within the region to discredit the relentless perception and perpetuation of the region as a high-risk jurisdiction. In this regard, I draw attention to the annual International Narcotics Control Strategy report previously mentioned by PM Mottley. Though this may not be the committee responsible for the report, I wish to commend Chairwoman Waters for her interventions resulting in proposed amendments to the text of the report, which, if successfully adopted, will increase the validity of the report and hopefully result in a more factual and less disparaging representation of the Caribbean. With the foremost in mind, I offer the committee the following strategies for improvement. 1, the development and implementation of common and preset international compliance standards. 2, the consideration of correspondent banking services as an economic and humanitarian good. 3, the support of a regional approach to improve cost-benefit position of correspondent banks. And 4, improve the provision of information to inform the International Narcotics Control Report. Ladies and gentlemen, I thank you for the opportunity again to present to you this morning, and I'm open to any questions that you may have.
Thank you, Ms. Delmar. Next, we will go to Mr. Shah. You are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of the committee, good morning. I am Wayne Shah, Senior Vice President of the Financial Institutions Group at Wells Fargo & Company, and a board member on the Executive Committee of the Financial and International Business Association, FIBA, of which Wells Fargo is a longstanding member. I appreciate the opportunity to be here today and look forward to sharing with you the many ways in which Wells Fargo is working to support our correspondent bank customers in the Caribbean. I will speak to you today in 2 capacities. First, I will discuss Wells Fargo's activity in the Caribbean, and second, I will discuss FIBA's efforts in this area. I work for Wells Fargo Corporate and Investment Bank and support both domestic and international financial institutions through a dedicated industry coverage team. Wells Fargo has provided strategic correspondent banking services to the Caribbean banks for more than 50 years. Our commitment to the region's growth and development is underscored by our market share and the number of countries where Wells Fargo services are available. Wells Fargo provides correspondent banking services to banks at the regional, head office, and country level. Today, we provide services to over 20 countries in the region. Following the 2008 financial crisis, the process known as de-risking began to show up in the Caribbean. De-risking refers to the phenomenon of financial institutions terminating or restricting business relationships with clients or categories of clients to avoid risk rather than manage it. In 2007, Wells Fargo and FIBA created the Caribbean Roundtable to highlight and discuss pressing matters for the Caribbean banking community. FIBA ultimately attributed de-risking to a change in perception that the Caribbean banks have become high risk. According to FIBA, de-risking seemed to impact smaller banks to a greater extent. These banks were no longer able to access international markets, execute foreign payment and trade services, or support cross-border credit cards. However, during this time, banking services necessary to support the region continued to be available through larger, unaffected financial institutions. Instead of exiting banks, Wells Fargo embarked on a significant effort to work with respondents on enhancing their BSA/AML programs. Wells Fargo's focus was to understand, improve, and align risk management objectives. Wells Fargo established and funded an annual Caribbean conference. Its purpose was to create a forum to work with Caribbean banks in navigating change. The conference is focused on building a better and safer, financially inclusive Caribbean ecosystem. As a FIBA board member, I would like to also take a few minutes to talk about the contributions FIBA made in response to de-risking in the Caribbean. Built on a legacy that spans over 40 years, FIBA is a nonprofit trade association and international center for financial excellence. Their membership includes the largest financial institutions from Europe, the United States, Latin America, and the Caribbean. FIBA is recognized by the financial services industry, regulators, and law enforcement as a center of excellence with deep knowledge and expertise in AML compliance, high-level education, and training programs. In 2009, FIBA first raised concerns about the potential loss of support for correspondent banking in the Caribbean. Over the next several years, FIBA invited stakeholders from Caribbean governmental agencies, Caribbean financial institutions, the U.S. Treasury Department, and U.S. regulatory agencies to debate and discuss potential solutions. To date, FIBA could not find any empirical evidence to believe that Caribbean banks had lesser abilities regarding BSA AML. In fact, FIBA's view was that the Caribbean banks that remain in the market have invested heavily in BSA AML compliance and risk management measures. Caribbean banks are also currently highly compliant with international guidelines and industry best practices. In FIBA's opinion, the era of de-risking small Caribbean banks has long been over. However, many challenges remain that still jeopardize financial inclusion for the Caribbean. These include, 1, making sure history does not repeat itself and de-risking does not affect the larger Caribbean banks. 2, encouraging correspondent banks to return to the region. 3, establishing a view that the Caribbean is a region of safety and soundness for financial services. 4, encouraging independent country and counterparty risk analysis. 5, calibrating regulatory mandates and addressing unintended consequences of legislation and regulations. On behalf of Wells Fargo and FIBA, thank you for letting me speak today, and I welcome your questions.
Thank you, Mr. Shah. Next, we will have Mr. Sharma. You are now recognized for 5 minutes to present your oral testimony.
Thank you, Chairwoman Waters, Ranking Member McHenry, and the distinguished members of the committee. I'm honored by your invitation to testify before you today. I look forward to sharing my views on the impacts of de-risking to our national, international, and economic security, as well as the capabilities of new technology and innovations happening in the traditional and non-traditional financial services industry, in particular as they represent many solutions to de-risking, as well as the inherent contents of financial system integrity. By way of background, I'm the CEO and founder of Inclusive. We are a hybrid financial and regulatory technology company that connects traditional banking with blockchain-enabled payments and virtual asset networks. And we do this by providing a full-stack, embedded anti-money laundering set of capabilities, bringing a number of integrations globally for Know Your Customer, transaction monitoring, analytics, digital identity solutions, and legal entity identifiers, all to provide a utility for Know Your Customer, AML, and other financial crimes compliance protocols. My colleagues here today have provided a thorough definition and description of de-risking itself and the manner in which financial exclusion in the Caribbean consequentially is linked to the growth and continued uncertainty of growing anti-money laundering obligations over many, many years. And I wish to focus my oral statement on the attendant risk of de-risking and the uncertainty that we believe provide more financial solutions than they are detriments to the financial services industry. First, it's important to note that financially excluded or underserved is disproportionately the vulnerable parts of our society, from low moderate income to global poor, those lacking in financial and credit history, jurisdictions labeled by many governments, including our own, and global standard setters like the Financial Action Task Force as being particularly weak in anti-money laundering or consequently working through anti-corruption issues, as well as certain types of activities like money services businesses, remittances and trade finance, mobile and web-based applications, and increasingly, those that are in the financial technology and the blockchain industry that are increasingly looked at by traditional institutions as inherently higher risk. The importance of financial inclusion cannot be overstated, and much of this has been discussed today. But in fact, the remittances and economic consequences for just global trade also cannot be overstated. In fact, over 3 times official development assistance is happening through global remittance flows, and many times for certain jurisdictions, that's 1/3 or more of their GDP. To formulate solutions to de-risking and financial exclusion, we must take note of a couple really important trends. And the first is the recognition that there continues to be an exponential increase in non-bank technological and web-based applications for finance and banking. And these are very important. Peer-to-peer transactions, virtual asset-level transactions, and the like are increasingly available to many that just do not have access to traditional financial services. Secondly, this growth has given a lot of regulatory agencies pause because of the uncertainty and unknown considerations associated with technologies that just look and operate differently from traditional financial services, banking, and payments. And finally, this growing body of regulations is in fact causing significant challenge for new and emerging entrants that are trying to provide financially inclusive opportunities that then have to put policies, procedures, licensing, and other applications in place that are often costly and burdensome. There are several important areas where solutions are being orchestrated within the context of the Caribbean and indeed globally in the service of financial inclusion and addressing de-risking. Several of them include enabling marginalized communities to be furnished digital wallets directly so that virtual assets can be funded directly into them, to provide them access to vital economic resources, to pay between each other and merchants providing vital assistance. Linking those digital wallets to accounts provides a gateway between fiat stores of value and virtual assets. Governments themselves are issuing their own digital currencies, which can automate financial access and in fact provide official assistance and other necessary services. Donors globally increasingly using virtual assets to provide needed assistance directly to recipients in need. And also issuing digital identity credentials that can be served as not only global KYC, know your customer utilities, but to verify and validate individuals and the transactions that they undertake. In sum, we must look at these tools as not only driving financial inclusion activities, but inherently these very attributes of these technologies serve to strengthen the financial crimes compliance and anti-money laundering objectives themselves. With financial innovation continues unabated, we must stop with this false binary choice of a system that may provide financial access versus threaten financial system integrity, because inherently they're linked. I thank you again for your time, and I look forward to your questions.
Thank you, Mr. Sharma. Next, we will have Ms. Charette. You are now recognized for 5 minutes to present your oral testimony.
Good morning, Chairwoman Waters, Ranking Member McHenry, and distinguished members of the committee. It's my privilege to address you at today's hearing on the topic of de-risking. Thank you for prioritizing this important topic. I will focus my testimony on why de-risking happens, the consequences of de-risking, and how technological innovations can help minimize the practice of de-risking. My name is Liat Chitret. I'm the Director of Global Policy and Regulation at Elliptic, the global leader and provider of anti-money laundering compliance solutions to virtual asset businesses and regulators globally for nearly a decade. We equip financial institutions, crypto asset businesses, law enforcement, and regulators with the tools and insights they need to manage risk, including, for example, to identify, assess, and act upon illicit and criminal crypto transactions recorded on the blockchain. Elliptic makes sense out of blockchain data and identifies trends and typologies that help our customers understand and evaluate their risk exposure and make risk-based decisions. De-risking is not a new issue. In 2015, I co-authored a report commissioned by Oxfam US titled Understanding Bank De-risking and Its Effects on Financial Inclusion. In that report, we explored the drivers and responses to de-risking, highlighted case studies of financial access, and provided recommendations for banks, regulators, and bank customers who have been de-risked. Not much has changed in terms of the complexity and detriment of the de-risking problem. However, the urgency of addressing de-risking of correspondent banking relationships, specifically in the Caribbean and other regions, is significantly heightened. We've heard about this at length in testimonies before mine. One piece that has not been mentioned is the stark gender gap in financial resilience in the Caribbean, where 56% of men can reliably access emergency money, but only 39% of women report being able to do so. While de-risking practices have not been localized in any particular population, community, or industry, in recent years there's been an aggregation of results, best described as a trend towards de-risking of sectors, including correspondent banks and specific financial corridors and regions. These account closures have had a ripple effect on financial access for individuals and businesses who rely on access to financial services with regional and national security implications. Financial institutions have significantly scaled back their risk appetites. These declining risk appetites, coupled with rising global scrutiny of anti-money laundering and countering the financing of terrorism rules, are the most commonly cited reasons for de-risking. Digging deeper, we note that underlying the practice of de-risking is the assumption that the affected customers present a higher risk of utilizing their bank accounts as a medium for raising, moving, and storing funds that are somehow tainted by illicit activities such as money laundering, terrorist financing, or tax evasion. Specifically, correspondent banks, which provide back-end services such as check clearing, foreign exchange trading, and fund transfers on behalf of other financial institutions, have been identified as a key vulnerability in AML-CFT regimes. In short, the risk is simply not worth the reward. De-risking is an issue that impacts entire markets. All invested stakeholders, bank regulators, and bank customers and clients appear to be acting rationally and in their own best interests. However, in doing so, they have created unintended consequences for market integrity, financial inclusions, AML-CFT objectives, and worryingly compromised national security interests. A lack of structured and systemic response to the issue of de-risking is perpetuating the challenge of regulatory arbitrage, the practice of utilizing more favorable laws in one jurisdiction to circumvent less favorable regulation elsewhere. International standards urge institutions to adopt a risk-based approach. Regulators proactively advise financial institutions to assess their policies and allocate resources according to their unique risk profiles and risk exposure. Although this approach is designed to allow for flexibility, it also introduces ambiguity. Inappropriate risk avoidance has replaced effective risk management. Rather than reducing the risk of criminal activity in the global financial sector, de-risking potentially increases systemic vulnerability. So how can these objectives be balanced? De-risking is a problem of exclusion that is remedied by inclusion, specifically the inclusion of technology actors. For the Caribbean, convening an action-oriented task force or committee of affected parties, including financial institutions, regulators, and trusted members of the private sector, such as tech companies, will bring innovative solutions to historically challenging problems. Congress should explore legislation to facilitate the acceleration of digital identification, offering clarity and certainty to an antiquated banking concept. As the digital economy has evolved, the need to update and expand the definition of compliance concepts, such as customer due diligence and know your customer rules, must also evolve. New legislation should explore KYC elasticity, the idea that these rules can be expanded to fit economic development and security realities straddling digital and traditional markets. Congress should expedite the thorough exploration of blockchain-based tech solutions that enhance US dollar dominance globally, including a stablecoins framework and central bank digital currencies that will ensure the market efficiency, privacy concerns, and interoperability with economic blocs, such as their Caribbean counterparts, will be considered. Many challenges remain in addressing the balance between financial integrity and inclusion. However, there are also many opportunities to address these issues by operationalizing public-private sector initiatives that address concepts such as identity and transaction monitoring. Moving into a digitized economy gives banks the opportunities to innovate, manage, and mitigate risks effectively. Tech innovations such as blockchain serve as an enabler to every stakeholder involved in the de-risking conundrum. On behalf of Elliptic, thank you for the opportunity to speak here today, and I welcome your questions, discussion, and follow-up.
Thank you, Ms. Chitrat. I now recognize myself for 5 minutes for questions. Ms. Delmar, as the CEO of the Caribbean Association of Banks, you represent the collective interest of banks domiciled in the Caribbean to strengthen the regional banking sector. I understand it can take weeks or even months to open up a bank account or to get transactions approved through the correspondent banks. What are the reasons given by the correspondent banks to the respondents or from correspondents to their individual and entity customers for such delays?
Thank you for the question. As would have been submitted in one of the exhibits by the Caribbean Association of Banks for our discussions this morning, what we have found is there is very little to no communication, specifically as it pertains to the closure of respondent banks by the correspondents. As far as the opening of accounts, the banks have now been forced into a position of extreme monitoring, as I tend to put it, where we are spending inordinate amounts of time trying to ensure that from a KYC perspective, the customers meet the regulatory requirements necessary to ensure that we are operating above the line or within compliance with regulatory standards. It is not, however, a situation where the correspondent bank necessarily dictates what is required for the opening of accounts, but rather the respondent bank's attempts at ensuring that every transaction that stems from these accounts will be deemed appropriate by the correspondents, thereby not jeopardizing the relationship with the correspondent banks.
So could you take a moment to tell me what steps your member banks have taken to address the concerns of the correspondent banks in order to attract their services? Have any of these efforts been successful, and why or why not?
Okay. As far as the relationship with the correspondent banks is concerned, the respondent banks at this stage have spent inordinate amounts of money in ensuring that we have invested in technology so that there is easy and significant monitoring of transactions through the processes that come in. We have also ensured that the relationships are maintained with the correspondent banks by being able to respond to questions that may come back to us depending on the transactions that will be processed through the correspondent banks in the very shortest periods of time. As far as the information coming back, we have not seen any re-entrance of correspondents who have left the banking region, aside from one more recent, which was really spurred by an increase in the volume of transactions that we would have seen being processed, primarily because of an acquisition that was made of an international bank, which of course then drove up the amount or the volume of transactions being processed. So again, the question on our end remains whether it is a situation of non-compliance from an AML perspective, or whether or not it holds true that because of the size of the transactions being processed, as well as the volume of transactions being processed, that we are being penalized from ensuring that these correspondent banking relationships remain strong.
Mr. Shah, in April of this year, Prime Minister Mottley and I co-hosted the Caribbean Financial Access Roundtable, remember? Which brought together heads of state, members of Congress, financial institutions, industry associations, think tanks, international organizations, and other stakeholders to advance concrete solutions to this continued problem of de-risking in the Caribbean. One idea that I raised received a great deal of support from across the spectrum of roundtable participants was a proposal to establish Examiners Academy here in the United States, which would train state, local, and federal examiners on Bank Secrecy Act issues, and also train foreign examiners to ensure that baseline standards, mission, and evaluation are uniform. My idea was inspired in part by the stories from banks in the U.S. about the dramatic differences in the review of banks and services typical to rural American versus the types of activities that one sees in Miami or other centers of international finance. Now, you were there. What is your perspective on this proposal, both as a lead correspondent banker in the region and as a representative of the Financial and International Bank Business Association, whose members are banks of all sizes and types doing business overseas?
Thank you very much for the question, Chairwoman Waters. I support 100% the idea of a training academy. In fact, FIBA's, one of their cornerstone is a training academy where they train regulators and bankers and providing a lot of feedback for the industry. There are two main issues when it comes to looking at a training academy. We know that our examiners are very well versed with the FFIEC manual, and they understand the BSA AML regulations. The problem is that it's not a one-size-fits-all approach. So a regulator that just spent a lot of time in the Midwest working with retail banks comes into Miami and gets almost a heart attack when he sees international transactions from Colombia and Brazil, the Caribbean. It's not an opportunity where he's very familiar with those transactions. Sometimes what you find is that when you look at his approach, our members have told us that he starts with his enhanced due diligence hat and everything is high risk. So that makes the examination a little different from how it would have been if he were with a small regional bank. The second part is when you look at assessing a bank's risk and you're training for it, the risk-based approach that we've been taught to apply is usually very subjective. So we would need two things to happen. We would need guidance that talks about exactly what we're being examined against. And secondly, when we have a business that's correspondent banking, for example, automatically everybody thinks that's high risk. Well, it's high risk for a bank that does not have a program in place to manage those risks. But it's just business for a bank that spends a lot of time putting in programs and technology to be able to manage the risk and do the business successfully. So I do agree with you that we need some sort of training academy. I think it would help the industry. I think it would be something that would level the playing field so that examiners are all reading from the same book. But I do believe that we would need proper guidance as to how the rules and regulations are applied. And every bank is specific, and every bank has a different risk profile. So,
Thank you.
Thank you.
Thank you very much. Now, the gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
Well, thank you, Madam Chair, and thanks for holding this hearing. Many of us have lamented President Obama and President Trump and President Biden's lack of emphasis on the Western Hemisphere, the Caribbean, Central America, and all of Latin America. So I commend you for engaging with our great friends in the Caribbean, so critical to our economy and their economy. We are inexorably linked, so thank you for holding this hearing. And I'm intrigued by what I've heard today. I think the presentations have been excellent. I'm delighted to have had Her Excellency Prime Minister Mottley with us as well. She's a great global leader on financial matters. Well, look, first, the Caribbean has its share of challenges. If you Google fraud and schemes in the Caribbean, a long list by country comes up of real challenges out there for the citizens in individual Caribbean countries. And of course, we've had testimony in this panel for many, many years over our own citizens here in the United States who were victims of Sir, I put that in quotes, Alan Stanford's crimes in Antigua, which certainly didn't help the reputation of the region. So my question first to Mr. Shah is, do you believe that the financial action task forces and the financial intelligence bureaus of our Caribbean nations are up to par? Are they doing good work? Because that's where some of this starts.
Yes, I do believe that those organizations do good work, and they have been very helpful in raising the bar. A lot of the issues that you see in the Caribbean is not specific to the Caribbean. They happen all over the world. And the impact from those issues are looked at differently. So the same financial crime occurring in Europe or the United States, when it happens in the Caribbean, it's magnified. So in the case of Mr. Stanford, he was actually from Texas.
Yeah,
And
well, so we don't need to delve into that. Just you think they're doing a good job.
I think they're doing a great job.
Good. Thank you for saying that you have an eyewitness to that. Ms. Delmar, you agree that the governments in the Caribbean are doing a good job in their financial action task forces and their financial intelligence bureaus?
Absolutely, and I wanted to lean on what Wayne said a little bit earlier, in that bad actors exist everywhere. And I think that given the limited resources that we have in the Caribbean, and again, based on the scale of these islands, any one infraction against the law is seen as a significant infraction. However, I believe that everyone involved is having a similar dialogue, and in terms of ensuring that from a legislative and regulatory perspective, we are keeping up to standard. And from a banking perspective, we are also ensuring that we shore up what is required from a KYC and monitoring process as well.
Thank you for that. Ms. Charette, you talked a lot about, and this applies to Mr. Shaw's testimony too, that fintech, of course, can help lower compliance costs. One of the largest banks in Florida is in my constituency in Arkansas, and I know what their AML BSA compliance burden is monthly, trying to comply with FinCEN, but they use fintech to lower that cost. Isn't that a way to really help our Caribbean nations be a more banked place and make it easier for correspondent bankings if we use technology to sort through the AML BSA compliance?
Absolutely.
Your mic, yeah.
Thank you. Absolutely. Fintechs do lower compliance costs in a way, and the way they do that is by removing the noise. So reducing false positives, compliance teams can be focused on high-risk areas. They can utilize their resources more smartly in a place which is lower capacities or lower resources. You get to focus your work and your teams.
That's helpful, and I think that helps our citizens in the Caribbean nations, and it helps our correspondent banks as well. Mr. Shah, if U.S. markets, and this de-risking thing comes from a lot of regulation put on by this Congress that raises the cost, that makes it more difficult to comply. So I think fintech's part of that solution. But Mr. Shah, if the U.S. financial institutions are exiting from correspondent banking, who is stepping into the Caribbean market? Who are you seeing stepping in to be correspondent banks there?
Well, we've seen a couple of payment processors stepping in. There is a...
Who is that?
There is...
You can submit it for the record.
Yeah.
Any other commercial banks that have stepped in from Europe or elsewhere?
There are a couple of banks from Europe, well, banking type organization, financial organizations from Europe.
If you'd submit those for the record, that would be very,
that.
very helpful to outline who is coming into that market if U.S. financial institutions are stepping out due to the regulatory burden. Thank you, Madam Chair. I yield back.
Welcome. Thank you, Mr. Hill. The gentlewoman from New York, Ms. Velasquez, who is also the chair of the House Committee on Small Business, is now recognized for 5 minutes.
Thank you, Madam Chair. This is an important hearing, and I really appreciate you doing this. Mr. Shah, Puerto Rico possesses a high number of CBRs, given its integration with the U.S. banking system. As the only member of this panel representing a major U.S. financial institution, could you please provide us with an overview of these connections, and what are your suggestions for deepening their impact?
Pardon me, I didn't hear the beginning of your questions. People were leaving the room. Could you repeat that for me?
Puerto Rico possesses a high number of CBRs, given its integration with the U.S. banking system. So, as the only member of this panel representing a major U.S. financial institution, could you please provide us with an overview of these connections, and what are your suggestions for deepening their impact?
Currently, we support Puerto Rico with correspondent banking, and one of the largest banks there is a customer of ours with over 40 or 50% market share. So we are supporting that region. It is not in my purview. It's not part of the English-speaking Caribbean, but I'll be more than happy to have someone respond to you with some of the details.
Thank you. And what options do we have for breaking the stigma about the concentration of illegal activities in Puerto Rico and other Caribbean nations, like it has been discussed here, that triggers financial institutions' decision to de-risk?
I think financial institutions make their decision to de-risk based on their risk appetite and the profiles of banks that they want as customers. Individual banks need to make that determination themselves. The stigma, I think, should be driven by what we see in terms of prosecution of financial crime and actual cases of financial crime. And in the Caribbean, there are very, very few areas and instances where we see high-level financial crime being prosecuted or the instance of validated cases of financial crime. So that's part of the problem, where the perception does not meet the reality.
Thank you. Ms. Delmar, does the rise of cryptocurrency in the region pose a threat to your harmonization efforts?
Thank you for the question. At this stage, we have not seen a significant influence in the region, which suggests that this is an ongoing issue or something that we need to be absolutely concerned about. However, we also recognize, as was previously discussed on some of these panels, that persons will find unique and creative ways of ensuring that they are able to get through the banking system in other ways other than banking. And so again, from the banking community, we have been keeping a very clear focus on activities around crypto within the region. To date, we have not seen anything that is suggestive of a significant concern.
Thank you. Mr. Mowla, how does the steadily reduced access to financial services in the Caribbean due to banks' de-risking efforts affect the prosperity and security of not only the Caribbean region, but the United States as well.
Sorry, could you please repeat the first part of the question?
How does the steadily reduced access to financial services in the Caribbean due to banks' de-risking efforts affect the prosperity and security of not only the Caribbean region, but also the United States as well?
Thank you for the question. Mostly, correspondent banking is vital for payments, for cross-border payments. So if U.S. investors, if people want to send remittances back to the Caribbean, want to invest in certain sectors in the region, that are likely unable to do so if correspondent banking is not available. So when we talk about nearshoring, when we talk about new U.S. economic policy, growing investment in our own hemisphere, we need to have access to correspondent banking in order to have that sort of influence.
Thank you. Madam Chair, I yield back.
Thank you very much. The gentleman from North Carolina, Mr. McHenry, who is the ranking member of the committee, is now recognized for 5 minutes.
Well, thank you, and thank you, Madam Chair, for hosting this hearing today, or organizing the hearing today. We heard a lot about risk management, compliance, and profitability, and appreciate the witnesses on this panel. Ms. Shetred, is it fair to say that when a customer is unbanked or de-risked, they do not simply disappear or go away?
Yes, that is correct.
Okay, all right. So the customer still needs to be banked regardless of the risk, correct?
Yes, also
All right.
correct.
So is it accurate to say that when one bank terminates a customer's account through, quote, de-risking, it's not really de-risking at all, but it's re-risking?
Absolutely, that's correct. I would agree with that statement. The reason I agree with that is because the risk doesn't disappear into the ether. It is simply moved or shifted into another space. That other space might be a smaller bank, a smaller institution that can't cope with the size of risk that is being shifted onto it. It doesn't have the anti-money laundering controls in place. It doesn't have the framework to deal with it. It might also shift into other more unsavory jurisdictions that are not observing any kinds or maybe minimal or lax regulatory structures in place, and that's the concept of regulatory arbitrage, and it might shift altogether underground, which is something we need to avoid.
Okay, so, and are we talking about illicit businesses here on the main, or are we talking about legal businesses?
Both legal and illegal businesses.
Okay, so isn't there a mechanism to get to illegal businesses? I mean, it doesn't seem like that's we're not going to ask the bankers to do this, right? We're going to ask the accountants at the FBI to do it, right? I mean, it seems like this is shifting the responsibility of a government obligation onto the private sector in some ways.
The private sector does need to step up and become police of sorts to make sure that they're keeping bad actors out of their platforms and systems.
Okay, so you have, so let's start with let's shift to the legal businesses, right? Maybe disfavored businesses. Maybe businesses catering more to those that are living on the wrong side of the tracks. Maybe mostly engaging in cash because that's how they have to manage their credit risk because they don't have credit, right? So you're taking those perhaps small businesses that are legal, that are disfavored, and you're taking them into less sophisticated institutions and saying, we've done a good job, right?
Yes.
That doesn't seem like that shouldn't be sound public policy. It shouldn't be a sound policy outcome.
So I'll bring it back to the risk-based approach that both international standards and jurisdictions ask of financial institutions to account by, which is that you need to, as a financial institution, assess the risk of the customer in front of you, medium, small, whoever is standing in front of you, legal, illicit, understand source of funds, and then based on that, mitigate those risks. Smaller institutions or institutions that do not observe AML-CFT frameworks are not equipped to handle those kind of businesses, and it just gets they get shut out of the system as they sort of jump between banks trying to access financial services.
Okay, and is this driven by AML BSA requirements that you're seeing de-risking?
Partially driven by that, and also a profitability calculation, where in some instances it just doesn't reward financially to bank high-risk customers For example, nonprofit organizations that are moving funds for humanitarian needs to different parts of the globe that require more due diligence.
Okay, but so the due diligence piece, so that means you have to have more people, more employees reviewing these account level transactions.
So not necessarily. This is where we would say that fintech solutions come into play, and we need to innovate around.
They come into play, but that's not the driver here.
Right, not the
Right?
driver.
We just passed our AML/BSA reform package last Congress. Major rewrite of FinCEN in the beneficial ownership regime here. The goal here, at least the goal when we started the conversation when Republicans are in charge, is to drive the expense structure away from people into technology, and so this could be a less burdensome thing, so that these types of accounts could actually still be banked.
100%.
And that apparently is not the case.
That's not what's happening right now.
All right. Anybody think it's happening? No? Okay. So we got our public policy work cut out for us still, Madam Chair. And while we've made strides, we got more strides to make. So thank you for your testimony. Thank you all for being here. Thank you for raising this important international and domestic challenge here. Thank you, Madam Chair.
Thank you, Mr. McHenry. The gentleman from California, Mr. Sherman, who is also the chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you. I believe I'm the only former tax collector in Congress. Why I would then be able to get elected is something to be studied elsewhere. But I do think that it's critical that we look at our anti-money laundering and our tax enforcement laws and accomplish those purposes that could involve trillions of dollars to the U.S. economy, and then take a look at making sure that we are good neighbors and friends to those in the Caribbean and help our Caribbean neighbors engage in every kind of economic development except financial obfuscation and the tax shelter business. And I realize that especially for the Cayman Islands, those businesses are very profitable, and they may not want to give them up. We should be willing to provide technical assistance to help our Caribbean friends deal with money laundering, et cetera, et cetera. So I'll ask our witnesses, are there countries in the Caribbean that want that kind of help, and are perhaps the Cayman Islands countries and others that specifically don't want that kind of help? Ms. Delmar?
Thank you, Senator Sherman. It certainly is always in the best interest of our people when we can receive support that will consider all of the challenges that we are facing and all of the opportunities and solutions in addressing challenges of this nature. Certainly, from a legislative perspective, I believe that there is adequate monitoring, as mentioned previously, and laws to ensure that even those companies, for example, those banks, are being monitored so that their transactions fall within the required compliance regimes. However, as you would have indicated, from a technical support perspective, I have no doubt in my mind that we would welcome the opportunity.
Thank you. Without objection, I'd like to put in the record an article from the Global Financial Integrity Organization dealing with financial crime in Latin America and the Caribbean and understanding each country's challenges.
Without objection, such is the order.
And let me see here. So we ought to be providing technical assistance. A number of countries in the Caribbean, I'll shift to a different question. Many banks are ending their correspondent relationship, not because of anything that a government has done, but because of what a government might do. They're concerned that Caribbean countries will apply bank secrecy laws or come up with other legal requirements that then conflict with American Know Your Customer laws. Would it be helpful, Mr. Mowla, if Caribbean countries were to pass laws explicitly stating that complying with U.S. Know Your Customer laws is fully legal under their legal system. Eliminate the risk that banks would be whipsawed.
Thank you for the question. I think what's really important here is dialogue. Perhaps more dialogue between the U.S. and Caribbean counterparts.
Do you think there are Caribbean countries willing to pass a law saying, go ahead, do business here, and you can also comply with American law? We're not going to tell you that you can't comply with American law.
I believe so. Caribbean countries and leaders are pragmatic actors. All that they're looking out for is the quality of life of their citizens. And if that is something that it would take, I think that they would be open to doing so. I cannot speak for any Caribbean leader on what exactly he or she may do, but it is something I think would be up for discussion, which is why I think dialogue is the way to go.
I would point out that Antigua, the Cayman Islands, Bahamas, Bermuda, British Virgin Islands, Turks and Caicos currently have a zero corporate tax. That makes them a tax shelter. The G7 has recently put together a program that we are almost in compliance with ourselves, applying a 15% minimum corporate tax. And it would certainly be helpful if our Caribbean friends would to join that scheme and tell all the corporations in the world, at least all the multinational corporations in the world, that they need to pay a 15% tax somewhere. I look forward to working on these issues, and I yield back.
Thank you very much. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Madam Chair. Mrs. Shevrak, what does research say about the effectiveness of our anti-money laundering laws in combating underlying crimes such as drug trafficking and terrorism?
We're fairly effective in having the criminal framework in place. What now matters is the implementation, and to ensure that the implementation occurs across jurisdictions in a standardized manner. So what we're seeing is that while some countries are stepping up to implement those and adapting those broad principles into their local legislation and frameworks, the challenge becomes across countries and communicating, prosecuting, investigating cases when they don't interact or when they don't have the same standards in place or perhaps more lax standards.
Thank you. Anti-money laundering regulations shift a substantial law enforcement cost burden to financial institutions. How can the federal government contribute to reducing those costs?
I'm sorry, could you repeat the question, please?
Sure. Anti-money laundering regulations shift a substantial law enforcement cost to financial institutions. How can the federal government contribute to reducing those costs?
Yeah, so one of the things that needs to happen is additional kind of practical clarity and guidance around what do these concepts mean in practice. We've seen that now we're almost in a hybrid economy that's both digitized and both cash intensive in many countries, and so redefining a lot of the same bread and butter concepts from compliance just into the new practical behaviors in which we operate with. So updating these principles and clarifying, basically removing ambiguity is what needs to happen.
Okay, thanks. What role might the federal government play in improving the quality of data available to financial institutions to form their anti-money laundering regulation responses?
So when it comes to data at the moment, it is spread across different agencies. And one thing that could be useful is sharing back with industry and with banks, financial institutions, a holistic view of, for example, insights from suspicious activity reports. What is it that are sort of macro trends that are being observed around criminality or typologies or regions or specific areas of susceptibility so that industry can respond. At the moment, there's a lot of communications coming towards government and a lot of work is being done to process those amounts of data, but having more dialogue around actionable insights could be more timely in helping banks respond.
Do you personally think the reforms instituted by Congress and the executive branch in the wake of Operation Chokepoint have effectively addressed the abuses of that program?
I'm sorry, sir, could you please repeat the question?
Sure. Do you believe the reforms that were instituted by Congress and the executive branch in the wake of Operation Chokepoint effectively addressed the abuses of that program?
Yeah, so Operation Chokepoint from 2013 really gave the Department of Justice actionable work and in which they subpoenaed over 50 different agencies across industries to bring forward activities from organizations that were really not both legal and illegal, stigmatizing them and offering them a reputational risk, which since then banks have really not been able to shake off. There is an opportunity to understand that definitions of risk, high, medium, low risk, must be tailored and unpacked specifically to industry and actors to avoid kind of sweeping sectoral or industrial stigmatization, which is a little bit of a leftover ripple impact from Operation Chokepoint.
Okay, thank you. What top 3 changes do you think Congress should make to improve the efficiency and fairness of our anti-money laundering laws?
So the United States has a big role to play and plays it quite actively in a variety of international forums. The Financial Action Task Force has been mentioned, the Wolfsburg Group. There's a real opportunity when it comes to the Caribbean and other regions to utilize regional organizations to help use American clout in those forums to push for additional detail and ambiguity dispelling in a lot of those regulations that are being put out. Additionally, there's an opportunity to push on innovation and utilize, bring innovative actors to the table and make sure that we have an opportunity to share solutions for some public policy issues that are continuing to trouble Congress and otherwise.
Thank you. My time has expired and I yield back. Thank you, Madam Chair.
Thank you very much. The gentleman from New York, Mr. Meeks, who is also the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Madam Chair. And I thank all of our panelists. Let me start out with Mr. Mowla. I represent one of the most diverse districts in the country, and a significant amount of my constituents are immigrants who use banking services to remit money back home to their family members and loved ones in their home country. But the ability to send and receive these funds is dependent on the ability to use the banking services and access them at reasonable costs. You note in your testimony that fee hikes in correspondent banking services, for example, and the use of wire transfers are an obvious negative impact on the customer. But it also seems to have a trickle effect in the more that these individuals turn away from using banking services, the harder it will be for correspondent banking, which is typically fee-based to cover the cost of compliance. So my question is, we always focus on underbanked communities here in the United States, but we also must assess the policies that exacerbate circumstances for underbanked communities abroad. Can you please explain what the impact of de-risking is on our diaspora and immigrant communities here in the United States, like many of the people that reside in my congressional district?
Thank you for the question, and having lived in Queens for quite some time, I definitely would love to answer this. First is, in the Caribbean, the remittances basically supplement working class income. We saw this in Jamaica during the pandemic, where remittances actually went up because it was seen, like Prime Minister Mottley said, we're all family. We're needing to help Jamaica when the tourism industry closed down because of the pandemic. Now, it has the same effect in immigrant communities, especially Caribbean diaspora populations as well, because they are disproportionately affected, especially as people of color. And if they cannot pay for the fees in order to send remittances home, then they have family members that are unable to sort of have their own incomes, but also travel back to the US. As you will know, many in the Caribbean diaspora, they don't just come for a weekend or two. They come for weeks. They come to shop, they come to restaurants, they stay in hotels. and it actually becomes a vibrant part of the U.S. economy. Thinking about Queens, you're thinking about tri-state area, Texas, California as well. So it all has a circular effect. So being able to help sort of the Caribbean populations that receive these remittances has an effect that allow them also to purchase goods from the United States. The Caribbean is reliant on importing goods for most of their local businesses, tourism industry, bed sheets, pillowcases, all of that is really bought in the US. Now, how are they able to buy it? They're only able to buy it if they can receive remittances from the diaspora in the United States.
Well, thank you for that. And let me go to Ms. Delmar real quick. You know, Caribbean countries require access to the international capital markets. And since most of their economies run large and persistent physical trade deficits with the rest of the world, and they heavily rely on imports for food, fuel, and capital goods not produced domestically. So I was heartened to see that, for example, that Barbados led the Afro-Colombian Trade and Investment Forum earlier this month. This exploration and potential collaboration, I think, could be just the type of innovation needed to prosperity in CARICOM countries and on the continent of Africa. So in what ways do you think we in the United States can support unique solutions to the challenges of growth and prosperity which draw on the talent and potential of diaspora communities?
Thank you for that question. You are correct in that the Caribbean remains very receptive to opportunities for innovation and creativity in terms of ensuring that we maintain vibrant economies. And so, like you rightly mentioned and pointed out, Barbados' initiative in ensuring relationships are being established with the Afro-Exim Bank in Africa is one of those areas that we see as a potential opportunity for us to continue to maintain that vibrancy that we need to maintain healthy markets. Similarly, with the US, we are hoping that the relationships that we have lost through correspondent banking will be returned based on the discussions that are happening now, but also the opportunity to continue to trade in more meaningful ways. For example, we want to ensure that US citizens will see the Caribbean, and certainly through the diaspora, will see the Caribbean as places to invest safely, because the Caribbean maintains the same levels of monitoring that the US requires that we do. And so we should be seen as a safe zone as opposed to the perception of a high-risk jurisdiction. The Caribbean sees itself as the third border to the US. And through that alone, it says that we are here to do business. We want to ensure the safety of the financial services sector. And the Caribbean Association of Banks and our members always ensure that we conform to the requirements of regulation to ensure that the markets are remaining safe.
Thank you very much. I yield back.
The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. Ms. Shedred, I think you mentioned a minute ago the words reputational risk. And I looked up the definition of this according to a supervisory and regulation letter from the Federal Reserve. And I quote, "Reputational risk is the potential that negative publicity regarding an institution's business practices, whether true or not, will cause a decline in the customer base, cost of litigation, or revenue reductions." Whether it's true or not. And that's according to the Federal Reserve. So when examiners go in and they intimidate the banker, the loan officers, the executive board, the board itself by saying there is a reputational risk to what you're doing, not even knowing whether it's true or not, it's their interpretation, it's their idea, it's their belief that it could be happening, rather than factually saying it is happening, is to me a very poor way of going about regulation. So I'll ask you the question, do you think it's appropriate to eliminate banking services based on risks that are not based in fact?
I agree that it's important to make sure that we're based in facts and in factual assessments, particularly on the ground, utilizing on-the-ground information that examiners are obtaining. Attempting to leave out all biases at the doorstep is very important. The relationship building between an examiner and a financial institution should be an open one that allows for influencing each other with information.
You made a comment ago about Operation Chokepoint, so you understand what I'm talking about here. Operation Chokepoint was when they were doing this intentionally, knowing that they were trying to drive a business out of business that was not doing something illegal. They were trying to intimidate the banks into getting rid of financial services or squeezing an industry or an individual. Whenever you don't even know if it's true. This is the horrible part about Operation Chokepoint, is that they were going in with their own personal biases versus fact, and that can't happen. I just spent the last several months working with FDIC, Comptroller of Currency, CFPB, Comptroller, FDIC, Federal Reserve, and FinCEN, as well as credit union folks, working on them trying to take out the independent ATM operators based on the fact they believe there's money laundering going on, which they finally admitted was not going on. They were intimidating the banks into cutting off financial services based on something that wasn't true. What is the recourse that these industries, these individuals have when they get squeezed out of being able to have accounts at banks?
The good news is that Operation Chokepoint is over, and I would caution us.
Oh, it is not. It is going full speed. As I just said, I just got done working on this issue and just got a letter back on it like 6 weeks ago to stop the nonsense. It's still going on today. It's still going on from the standpoint of the far left is trying to intimidate banks into cutting off services to energy companies. That goes on in this committee right here. So it's still going on today. I'm not, I don't apologize for interrupting here, but don't misunderstand. This is still there. It's just taking a different form. You may proceed.
So financial institutions will require to operate logistically. They're going to go where they can operate openly, freely, and conduct their business. If we're closing that opportunity for them, they'll just go elsewhere. They'll go to the places where they can operate without the fear of examiners coming in. Practically, what I would say is that examination books and guidance needs to be updated. It needs to be updated from a variety of different perspectives, including around personal conduct, around what is actually tested, how it is tested, the kind of evidence that financial institutions need to submit, and there needs to be cautioning around bias and the reputational challenge and adverse media associated with it.
Well, I have a bill, and it's actually passed the House here, 3095-2, that stops the nonsense. It forces banks to disclose to the customer when you close an account why you did it, so that the customer actually knows what the problem is, so they can then hopefully remedy that situation, or the next place they go, they can show that we fixed the problem, or down the road it can be remedied. And so that there is not this bias that's going on, this reputational risk threat that's going on, so we can stop the nonsense. So, it's important to me, I think, that we understand that the regulators are the ones who are imparting this reputational risk nonsense out there. They're the ones that are promoting this sort of interpretation and this intimidation. The banks have got to push back on this and say, show me where I'm wrong, prove to me that there's a problem here. I don't support banks that have problems, but I do support the proposition we've got to make the examiners do their job, which is only examine with regards to whether the laws are being complied with, not make stuff up, which reputational risk, according to the definition by the Fed itself, says could not be true.
I agree with that.
Thank you very much. Now yield back.
Thank you very much. Mr. Lukemeyer, you and I may have something we can work on together. Great. Thank you. All right.
Let me write this down.
The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you. And I have a question first, but then I want to respond to something Mr. Lukemeyer had to say, so I hope he stays in the room for a few minutes. And I want to thank the panel for being here in Washington on one of our busiest days, where we each have like 5 committee meetings going at the same time. So I just want to apologize in advance, kind of, other people are running around. I had a chance to meet many of you when I visited the Caribbean with the Chairwoman and participate in the roundtable that the Prime Minister established and the the Chairwoman put together. And so, Mr. Shah, I'm going to start with you, sir.
Excuse me one moment before you do that. Mr. Lukemeyer is anxious to get out, and you wanted to engage him?
Well, but I have to do the first question to lead to the second question and the response. All right, so I'll start with Mr. Lukemeyer and let him get out of here. So one of the things that, there are sort of three things that are potential risks. Crypto, drugs, and tax shelters, okay? But we saw, and one of the things that came up a lot was safe banking, actually, Mr. Lukemeyer, where we have your bill on dealing with Operation Chokepoint to stop that reputational risk component. And to Mr. Lukemeyer's credit, his bill in the Safe Banking Act, which provides a safe harbor for banks that provide banking services to the marijuana industry, his bill has passed the House 7 times now. And we're going to get it past the Senate, I think, in the next 3 months. So we're going to be able to deal with that reputational risk concern that you have, because much of what they're facing in the Caribbean, and it was clear that there had been some redlining going on, in my opinion, of the entire region, which is a doorstep to America. And we need to have, they're our friends, and we ought to treat them like friends. And we aren't in the banking industry, with the exception of Wells Fargo, quite frankly. A lot of people had withdrawn because of these reputational concerns, some of it dealing with cannabis. And we can at least address that if we get that darn bill passed that has a lot of your language in it. So that was my only thing I wanted to say to the gentleman.
I think the gentleman and we worked together on that bill diligently, and your efforts are to be commended. But yeah, I think, where there are problems, we need to be concerned about it, whether it's illegal drug dealing, money laundering, whatever the illicit problem is. But I think reputational risk is something that should be off the table, because the way that's defined, the way they use it as an intimidation tactic, is something that can't be tolerated. But I support your efforts and anybody else's efforts here to make sure we have some clean entities to go to and handle money and transactions in an effective and efficient way.
All right, and I thank the gentleman for sticking around for a second. Mr. Shah, welcome. I didn't forget about you. We saw Wells Fargo was one of the few American banks left doing correspondent business in the Caribbean. In your testimony, you describe how, despite the risks, your bank chose to stay in the region and work to mitigate those risks. Specifically, you described how Wells Fargo worked with other banks, other Caribbean banks, to help them improve their anti-money laundering and Bank Secrecy Act programs. Can you please expand on what types of information and tools you provided to help these other institutions improve their risk management?
Thank you for the question, and it's nice seeing you again. As part of our business, one of the things we do is conduct independent analysis and risk analysis for the counterparties and the countries in which we do business. So we take a hands-on approach to working with our respondent banks. In the effort to elevate them, we've done 3 major things. One is engage them to understand their programs and how that fits into the business type that they're doing. The second thing we talked about is how well they comply with the necessary rules and regulations that makes them safe. And one of the safeguards that we take pride in is making sure that we accept transactions that are safe and sound, and we prohibit transactions that are in the shadows, so that we protect the U.S. financial system. That's our main priority. We've spent a lot of time with remediation, working with them to explain to them our risk management policies and procedures. We have an annual get-together for all our customers, where we talk about the new rules and regulations, our way of looking at them, how we manage risk, alignment of risk appetite, and what they should expect in terms of challenges. We also work with the industry through FIBA to make sure that they have available training, to make sure that they have a forum for discussion, and to air their concerns and react with them and work with them to make sure we clear that up. So We provide a great deal of support not only in banking them, but helping them navigate through the changes.
Thank you, sir. My time has expired. I yield back to the chair.
Thank you very much. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair. And if we're talking about money laundering risk, we cannot ignore the absolute disaster at the southern border. Over 2 million people have been apprehended this fiscal year alone, and this number doesn't include those that successfully evaded Border Patrol agents. Even the New York Times admitted this summer that drug smuggling revenues are estimated to top $13 billion this year, and up from only $500 million in 2018. $13 billion. Now, open borders, and I live in Texas, full disclosure, so I've been down there a lot. Open borders are not only enriching multinational criminal organizations, but the consequences are also having a very real impact in our communities. And the Texas Department of Public Safety alone has seized more than 340 million lethal doses of fentanyl this year, and we all know what a small dose of fentanyl can do to numbers and numbers of people. Additionally, a record number of migrants have died along the southern border this year. It's 750. The Biden administration must start thinking about this seriously, and they're not doing it. So, Ms. Shetret, from the financial services perspective, what are some ways we could better track the proceeds from illicit activities flowing to drug and human trafficking organizations?
So at the moment, financial institutions are able to follow the basic policies and procedures in place that are very manual and very labor intensive. They're basically looking for a needle in the haystack to try and identify those particular proceeds within the banking system, and that's cumbersome. If we start thinking about how we could implement some innovative transaction monitoring, perhaps those that are blockchain-based, what we might find is that there's a concept of traceability that goes and provides visibility end-to-end. Where has money been? Where is money going towards? And so when we think about innovating around a U.S. Digital dollar, whatever that might look like, and the thoroughness of work that needs to go into developing that, something that is blockchain-based will allow us to better identify and track, stop, seize, confiscate, and hold illicit proceeds so that we're able to pre-screen rather than post-investigate those kinds of instances.
Yeah, there's a lot of things happening after the fact. One way to make it easier would be to secure the border, and have fewer people in the business, right? But if you go down there, it's just unbelievable what you see in the drug traffickers and so forth with these young kids. But if we would get after it and really secure the border, we'd slow a lot of this down. As we talk about de-risking, I feel like I need to share my experience. When I was targeted under Operation Chokepoint, I'm probably the only person in this room that has been affected by Operation Chokepoint. I received a call several years ago from my bank, and I was told I had 24 hours to move my money out of there because they no longer wanted to do business with me. And me, I'm a car dealer. They didn't want to do business with me. This is a bank I was on the board with for 24 years. No problems, and they decided in 24 hours that they didn't want my business because they no longer want to do business with me. And I'd been with this bank, as I said, for a long, long time. To this day, they've never told me why. I can't imagine what pressure the bank had to sit down in a community I am where everybody knows everybody, where they had to sit down and say, okay, who's going to call Roger and tell him that? I can't imagine what the pressure they had to stop doing business with me must have been unbelievable. And this just shows if this can happen to a sitting member of Congress or a board of director or somebody that's been in the community forever, it can happen to anyone. And it's a total crisis, and I was lucky that I had a bank that would take my business, which was a decent business. 89 years we've been in business, but some people don't have that luxury. So I know you've looked into the Operation Chokepoint and its effects on the marketplace. You talked a little bit about it just a minute ago. So can you talk about the negative consequences of indiscriminately de-risking entire industries? I mean, there were at least 40 industries on a piece of paper somebody wrote down and said, we don't do business with them. We don't want to do business with them. And these are family-owned businesses. This is capital that people have put in their own money, and just be wiped off the board is not the way that we're supposed to do things here in America. So quickly, can you talk about some of the consequences that you've seen in wiping out industries?
I'm sorry to hear of your personal experience there. Thank you for sharing that. I think that the disappearance of brick and mortar banks, the disappearance of kind of that personal interaction is one consequence that we're seeing, which emphasizes the need for digital know your customer so that we understand who you are when you come to bank. The loss of sectors means that we're having entire swatches of business that are going where they can find banks. If that's out of the United States, that's where they'll go. They'll go to find the first opportunity to properly bank and conduct their business, which means that innovation is leaving, which means that there's movement. You know, the borders are becoming inconsequential if the provision of services are not maintained here. There's a loss of intellectual property. There's a loss of jobs. And so we need to find a way to offer banking services. There's a financial inclusion risk where people who had access, ATM businesses and so on, that are unable to maintain bank accounts, that's challenging across the board and actually inhibiting financial inclusion.
I yield my time back, Madam Chair.
Thank you. The gentleman from California, Mr. Vargas, is now recognized for 5 minutes.
Thank you, Madam Chair. I appreciate very much this hearing, and I learned quite a bit. In fact, most of my questions have been answered. However, one of the questions that I did have, my good friend Mr. Hill from Arkansas was pursuing, and of course he always has very insightful questions and perspectives. He has great experience both in the private sector and in government. And he asked, what happens when American financial institutions leave? Who takes their place? And I think he asked then for you guys to get back to him. But if you could maybe speak a little bit about that now, because my question was going to be, is it the Chinese banks that have established then themselves in there? I understand that China views the U.S. disengagement as an opportunity to expand its Belt and Road Initiative in the Caribbean and challenge U.S. diplomatic and economic regional influence. Recently, 7 Caribbean countries, Antigua, Bermuda, Barbados, Dominica, Grenada, Guyana, Jamaica, and Trinidad and Tobago have signed BRI agreements with China. As a result, Chinese investments in the Caribbean will total over $16 billion in infrastructure and financial partnerships over the next 25 years. According to the Caribbean Development Bank, Caribbean countries have readily grasped Beijing's offer of easy financing as traditional U.S. financing partners have pulled out of the region. So to all the panelists, can you provide some information about this? Because it does concern me.
Thank you for the question. I think the United States has the upper hand in the situation relative to Chinese engagement in the Caribbean. China has a very one-dimensional relationship with the Caribbean, usually economic. You mentioned the Belt and Road Initiative, you mentioned investments, potentially Chinese correspondent banks and Chinese currency in the region. The U.S. has a more multi-dimensional relationship. We think about politics, we think about security, we think about diplomacy. These are all things that the U.S. does well. You just have to look at U.S. Southern Command and its trade winds exercise in the Caribbean as a prime example. Now, where the U.S. needs to compete more is on the economic side. Their economic linkages do exist there, but they exist in trade, yes, they exist in investment appetite. Where it is severely lacking is in the correspondent banking, is in de-risking. And as I said before, many of the U.S. economic policies that have been recently announced, specifically at the Summit of the Americas, PAC 2030 being announced by Vice President Harris, none of that will matter if correspondent banking is not available to Caribbean countries, to people, and to their institutions.
Anybody else?
Thank you for the question. I'll offer a couple thoughts on this as well. Part of the challenge here is exacerbated by some of the thoughts earlier conveyed as related either to reputational risk and or sanction or policy by the U.S. government. If, for example, and I commend the great work, Madam Chairwoman, on looking at revisions on how, for example, the INCSA report works, because if banks look at an official U.S. government document that effectively labels a region as high risk, U.S. institutions governed by U.S. regulators will leave that region, leaving holes for both investment, technical assistance, and financial services opportunities. You rightly point out that one major government, China, has very much increased its investments not only in the Caribbean, but across the world, LATAM, Africa, et cetera, where either U.S. institutions, U.S. companies have been either denied and by way of sanctions policy, or by various U.S. government and other initiatives that have either labeled directly or indirectly those countries, those jurisdictions, as being categorically higher risk. And then, as my colleague here explained, if an institution regulated by U.S. regulators is now doing the cost-benefit analysis of saying, one is higher compliance risk, and therefore I'm going to be scrutinized more and potentially subject to sanction, low profit, or both, there's no incentive to do business there. I would say that part of the solution set is to create incentives by way of policy and legislative measures that actually incentivize positive foreign direct investment, including financial services access into one of the most vibrant financial and capital markets on the planet, the United States. And one of those ways, especially through the advent of financial technology applications, web-based digital asset applications, is one can today now have the ability to put individuals, households, corporations, nonprofits in those regions into US-based accounts, which would promote those regions, invest in those regions, and reestablish less of a enforcement-centric work of financial services and foreign policy, and a much more incentivized development orientation that we really need to reorient our national and economic security policy.
Well, thank you. And again, I found this hearing to be very positive, and I appreciate the chairperson. Thank you.
Thank you very much, Mr. Vargas. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Madam Chair. Ms. Shettard, I'm going to start with you and pick up on the China theme. We talked a little bit about this already. If you could, I'd like you to sort of outline how does China's Belt and Road, from a financial standpoint and a sanctions avoidance standpoint, work in Africa? And then from that parallel, how do you see it potentially playing out in the Caribbean?
Thank you for the question. I've spent, since 2008, I've been working in the Horn of Africa, and I've seen the rise of the Chinese economic power, and I think I almost see it as the back to the future situation of the Caribbean, so I'd like to describe it from that perspective. The Chinese initiative at the moment is not time-bound. There's patience in the making, and we've seen that unfold over the years in Africa. What I've specifically noted is that around 2013, when many of the major banks de-risked businesses in the Horn of Africa and essentially left, what we saw was that China stepped up in a variety of different ways. For example, all Chinese manufactured phones are hardwired with wallets that are directly connected to potential Chinese currencies, and essentially bypassing settlement from the US dollar.
So essentially pulling them away from the dollar-based system.
Exactly. And what that means when it comes to national security instruments such as sanctions and sanctions implementation is that enforcing sanctions becomes that much harder because the settlement is no longer against the US dollar. We have no visibility into those transactions. We've shot ourselves in the foot in trying to follow the money and track that process.
Now take that, right? So the de-risking has led to this situation in Africa vis-a-vis China. Can you draw a parallel to maybe some fears we would have from a de-risking in the Caribbean standpoint? Do you think China would implement a similar policy potentially and set up new bases around which, essentially bases around which to bypass the dollar-based system?
Yep, so the parallel is certainly drawn, it's certainly there. I would see a situation in which, again, the patience, the build-out of mega projects that are infrastructure-based are accompanied by soft tech solutions from China that are meant to establish economic power. And that's done across industries. So in a situation in which there's full de-risking across the Caribbean, there's still businesses that need to operate, tourism that needs to happen, activities, financial accessibility globally that will need to be ongoing, and whoever steps up to providing those services, Chinese actors included, will win that business. That's the only option that would be left on the table.
Yeah, so the fear being what we've seen happen in the Horn of Africa, we will see again in the Caribbean, obviously.
Yes.
What in your eyes is the best response from a U.S. standpoint in terms of preventing that sort of thing from happening?
So I would encourage us to expedite our exploration of the U.S. digital dollar, understanding what it could look like, assessing its opportunities and risk globally. There needs to be a U.S. dollar dominance assessment that encourages innovations.
I don't want to go too far on this. So I think dollar dominance is frankly a priority of mine. I think most members of the committee. I do think personally, I'm not a CBDC digital dollar guy, but I do think that if, and I know this is being negotiated, if we're smart about articulating a stablecoin bill that mandates US dollar-based reserves and makes sure that the stablecoins that are proliferating across the globe are the private stablecoins, are dollar-backed essentially. I think that strengthens the dollar. I think that adds to our ability to implement sanctions, and from both a national security and innovation standpoint, puts the U.S. at the forefront of what I believe is one of the most exciting technological advances of my adult life. And so I say that to encourage those negotiating on said bill to continue on, be thoughtful, and solicit feedback from those of us on the committee who spend a lot of time in this area. And with that, I yield back.
Thank you so very much. Encouraging those who are negotiating. I hear you loud and clear. Thank you very much. Let me go now to the gentlewoman from Ohio, Mrs. Beatty, who is also the chair of the Subcommittee on Diversity and Inclusion, now recognized for 5 minutes.
First of all, let me thank Chairwoman Waters for holding this hearing today, and to all of our witnesses, thank you for being here today. I think we've all learned a lot. I'm going to take about 20 seconds to take a moment of my time for personal privilege to thank the Chairwoman for allowing me to join her at the Chairwoman's Codale to Barbados and to the Bahamas earlier in this year. I had the honor of meeting with Prime Minister Mottley, who was on the panel before us, and I want to make sure the record indicates that I thank her for the testimony and participating in this morning. Again, this Chairwoman is making history. When we talk about de-risking and its impact, not just on the Caribbean, but the United States as well. Certainly, we have heard and we all know that it is a critical issue. And I'm glad that we're calling the attention. So for all of those who are watching us, many of our brothers and sisters from the Caribbean, we hear you, and this is very real. I'd like to begin by touching on some of the topics that we discussed, Chairwoman Waters, on your Codale, because many of those things we are hearing here today from our witnesses that we heard in our roundtable. So, Mr. Mowla, let me start with you. I know we've covered a lot today, and some of the things I'm going to ask about, maybe several of you have touched on, but I want to talk about how we can provide technical assistance for legal and regulatory uniformity across the region, or how we could support a consortium, think pilot, maybe, that goes across the region. Do you have any thoughts or suggestions or anything that we could do that would be particularly effective with this issue?
Thank you for the question. I think, as I stated before, dialogue is very important. Being in the region, the Codale was a prime example of doing so, but having regulators, banks in the region, meeting their different counterparts in the Caribbean, understanding that this is, yes, about business, but it's also about personal lives, it's also about quality of life. Having that personal relationship is very, very important. Technical assistance, not just being in the embassies in the Caribbean, but across the Eastern Caribbean, where they usually are only worked out of because of Barbados. Being in some of the smaller islands that are maybe not part of CARICOM. Building a consortium, yes, making sure that policies are harmonized, yes, but also contextualized to the different circumstances of each Caribbean country, even sub-regions as well. The Atlantic Council is currently, alongside some of our partners that are here on the panel, looking to promote a U.S. Caribbean Banking Forum alongside CAB, alongside FIBA, alongside a lot of other organizations that have been in this space for the past decade, ensuring that there is a space for dialogue, that there is a way for U.S. regulators, U.S. legislators to go down to the region on an annual basis to ensure that there is much more harmony between what we're essentially talking about is just access to the global financial system, access to be able to buy food, access to be able to buy goods, access to afford healthcare and purchase healthcare outside of the Caribbean region.
Okay. I want to thank you for that. And I think the key word is us communicating more. Look, this is not new. I can remember coming onto the financial services and meeting with the World Bank and talking about these same issues with remittances and how much money we could withdraw from accounts to send back home. So one of the things that we're hearing that there's been this whole full list of evaluating nations' risk deals with money laundering and financing of territories. And these lists certainly flag certain countries, many of which are the island nations in the Caribbean as high risk and in need of greater monitoring. So can you tell me, Ms. Delmar, how can we come up with a better system or any ideas you can give us to help us properly be able to assess money laundering? How do we assess this and the risk objectively and fairly? Because I do believe that it is unfair. I do believe that just as we deal with systemic racism in our countries, that there are things that happen that are not just. And I know Congresswoman Waters has some legislation. So I only have a few seconds and you may have to write it in to me.
Okay, thank you so much for the opportunity. Certainly, I think that there is a place for the INCSA report. I think, unfortunately, as it is being utilized now, it does not allow us to get the full gist of what is happening in the Caribbean, how we are actually fighting and combating the scourges of anti-money laundering and terrorist financing. I would be more than happy to submit to you a more formal response in respect of time, but certainly I think that this perhaps is an actual gateway to addressing and understanding a little bit more the specific nuances of each Caribbean island. Thank you.
Thank you, and thank you, Madam Chair.
You're certainly welcome. Thank you. The gentleman from Guam, Mr. San Nicolas, is now recognized for 5 minutes.
Thank you very much, Madam Chair, and thank you so much for hosting this hearing, and thank you to the panelists also for your excellent presentations. I wanted to begin by making it very plain that Guam and the territories of the United States empathize with you. We get blacklisted multiple times, usually by the European Union. It's very frustrating, especially being a member on this committee and having to contend with the European Union blacklisting us for being a money laundering risk and a terrorism financing risk. And our own banks in our territories, to include Guam, are FDIC insured, are regulated by the Treasury, are regulated by the Comptroller of Currency. We have all the trappings of U.S. protections, and yet we suffer circumstances very similar to yours. And so I wanted to first begin by thanking Madam Chair for having this hearing to call attention to this issue and to also put on the record the circumstances of our U.S. territories that are very much the same as our brothers and sisters in the Caribbean. My question's pretty simple, and it's related to something that we contend with on our end. If a U.S. territory, which is part of the U.S. financial system, is still suffering the consequences of being blacklisted by these so-called watchdog, type of operations, how does the Caribbean propose to be able to remedy their circumstances when territories in the United States themselves are suffering the same? I guess I'll pose that to Chairwoman Delmar.
I'm sorry, did you direct a question to Ms. Delmar?
Yes, Madam Chair, please.
All right, thank you.
Thank you for that. Sorry, I didn't hear that direct. Certainly there are, it's a challenge for us wrapping our minds around how do we consistently get ourselves off these blacklists, as you are clearly experiencing as well in Guam. We continue to ensure that we highlight the positives that are being done in the Caribbean region from a legislative perspective. We continue to be open to dialogue. Opportunities like this are not missed by the Caribbean, but it really boils down to whether or not, like we previously said, there is adequate communication in understanding the nuances that govern the various jurisdictions within the Caribbean. Certainly, we have islands now that are subject to US law. We have Caribbean islands that are subject to European law, just by virtue of the fact that we were established in more instances than not under the UK systems. So I think it is something that has to be dealt with as a common good, that has to be seen as a common opportunity by the European watchdogs, as you put it, as well as the US government and the members of CARICOM and the wider Caribbean, in ensuring that we are able to outline succinctly the ways in which the Caribbean will be reviewed. And that comes across also in the written submission provided by the Caribbean Association of Banks.
Thank you for your response. Does anyone else in the panel wish to add to the question or the conversation?
I'd like to add in 2 quick points, please. One is that the methodology that is used to assess a particular jurisdiction being put onto a particular list can absolutely be revisited. There's an opportunity to look at the methodology not just from an anti-money laundering, counterterrorism, finance perspective, but to consider other components. For example, the stage of development of that country. Is there a famine in that country? What is the financial inclusion methodology that could also be coupled into that, so that there's more of a holistic approach to methodologies that put particular countries and jurisdictions on lists. The other piece is that there needs to be a strengthening of a dispute resolution or an ombudsperson capability of getting removed off of that list. So once you're on the list, it doesn't need to take years and years to get off the list. What are some ways in which parliamentary action, swift action, could potentially get you an expedited removal from the list to hopefully remediate any potential concerns that the jurisdiction, reputational concerns that the jurisdiction is absorbing?
I would like to add, from the industry perspective, every time one of these lists gets updated and we see some islands on there or some countries on there, we ask the question, what's the consultative process and communication for you to get on the list? Is somebody making these decisions in a vacuum? Where's the communication? How do you have a dialogue to verify that these countries need to be on the list? So that's one thing I would think from an industry perspective makes sense, that before somebody gets on a list, just like we're trying to do with the INSA report, let's have that dialogue, let's have that confirmation and make sure that the place on the list is deserved.
My time has expired, Madam Chair, but those are all excellent points that I very much support. Thank you very much for the opportunity.
And thank you very much. The gentlewoman from North Carolina, Ms. Adams, is now recognized for 5 minutes.
Thank you, Madam Chair, for hosting today's hearing. Most of the correspondent banks are the largest financial institutions, like your bank, Mr. Shah, Wells Fargo, and others, to include Citibank and Bank of America. There's some small financial institutions offering this service, but it's not too common. I would imagine that is because it's expensive to maintain the overseas staff and branches, and because the anti-money laundering and sanctions compliance is expensive. So, Mr. Sharma, Mr. Shah, Ms. Shetrit, is it a good idea to facilitate the entry of more small and medium-sized financial institutions into the correspondent banking services? And if so, how do you think Congress can help facilitate that entry? Mr. Sharma, you want to go first?
Yes, thank you very much for the question. I absolutely agree that smaller, medium-sized institutions should certainly be encouraged and facilitated both by way of regulatory as well as legislative enablements and encouragements. In addition, as several of us talked about earlier, the advent and innovation of non-bank financial services, web-based applications that are actually providing access, also give a very good opportunity to provide direct access for cross-border payments that are either remittance-bound, corporate payments, trade finance, And some of these innovations actually do not require the dependencies on global clearing banks or custodians or correspondent banks at all. And I think that part of the Stablecoin Act, part of the work that this committee has been doing in looking at digital assets and blockchain-enabled financial services can absolutely stimulate those while also enabling and reinforcing U.S. dollar strength, especially with respect to U.S. dollar-backed stable digital currencies, that also serve to enable immediately small and medium institutions in the United States. And I would say finally that we already have great opportunity to do so by some of the comments that were made earlier. Diaspora communities and those regions of the country that have direct connections to Caribbean nations, those diaspora communities, be they small businesses or households, can be enabled for direct connections for financial access in ways that are enabled. And I would also look to—
I want to move on and give some time
Yeah.
to Mr. Shaw.
I would just look at CRA and other enablements that way too.
Okay, thank you. Mr. Shaw?
I'm sorry. When you look at the environment for correspondent banking, usually the large banks have a significant infrastructure and program to manage those risks. It's always a good idea to have many providers of the service. Small and medium-sized banks would also have to invest in a similar infrastructure and program, and also be able to respond to the regulators like a big bank would. So from my perspective, it's always a good idea to have more and more folks providing the service, as long as they can manage the risks appropriately.
Okay, Ms. Shetty.
I agree with what's been said so far. Thank you.
Okay, thank you very much. So let me ask Mr. Sharma, can you briefly discuss how new fintechs are playing a role in the correspondent banking space in the Caribbean?
Absolutely, and I want to commend a previous panelist, the esteemed Prime Minister from Barbados, and many other Caribbean nations are exploring the use of technology, particular blockchain technology, for purposes of asset issuance, in other words, digital assets, including central bank digital currencies. Secondly, the ability for peer-to-peer payments directly that do not require a specific financial intermediary, that enables both the secure and equitable access between counterparties, again, corporates and otherwise. And that innovation is being seen in the Caribbean in particular. A previous question on how Caribbean nations can actually prove what they're doing to provide security and risk should also assess the level of inclusion opportunities they're providing, including through the use of financial technology applications. And that should be leveraged, that should be assessed and considered when thinking about the security, risk management, AML, and other considerations that they are actually undertaking, because some of those innovations are in fact providing inclusion and greater transparency in tandem. So those are some examples.
Thank you, sir. I'm out of time. Madam Chair, you're back.
Thank you so very much. The gentleman from Wisconsin, Mr. Stile, is now recognized for 5 minutes.
Thank you very much, Madam Chairwoman. Ms. Shetred, if I can, we've spoken today about the breakdown of correspondent banking relationships and its impact on Latin American and Caribbean countries, rightfully so. But these also aren't one-sided. And I'd love for you to shed a little light about the other end. The corresponding banking relationship is with U.S. Financial institutions that facilitate business with American companies. And can you talk about how American businesses and workers would be impacted when international financial flows would be disrupted?
I'm sorry, could you clarify the question?
We got a little bit of noise there with the door. But we've talked about the impact that this would have on Latin American, Caribbean nations. What's the impact here in the United States of America? The other side of the coin, if you will.
So one of the things that we're seeing here is that there's a brain drain. Innovation is not quite flourishing as much as we'd like to see it because essentially businesses are moving to where they can operate openly and freely, and that's difficult to see. America is a wonderful place to innovate, and we'd like to keep that in this country. So there is a concern around brain drain there. The other piece is that the regulatory framework requires a little bit more adjustment to be clear and to allow for innovation to bloom here, and that's something I would point out.
Thank you. Let me continue on with you if I can. Your open testimony, you spoke about how de-risking is, I think, quote, perpetuating the challenge of regulatory arbitrage. Can you explain how this dynamic plays out, and does aggressive de-risking from the U.S. Potentially yield global financial flows to countries such as China, which may have very different standards?
So the concern of regulatory arbitrage is real, and what happens is that there's no standardization globally that's being enforced. So what we see is that one country implements particular frameworks that then doesn't get translated. This impacts the opportunity to investigate, to share information. The criminal codes are different, the legislation varies, and there's no common language. Sharing information under very complicated memorandums of understanding becomes an ordeal. It's not timely. This is particularly difficult when we look at governments that are not necessarily cooperative with the international frameworks, of which we do require information sharing because criminality does know no boundaries or barriers, and we do need information sources around the globe. So one of the things that we've been seeing is that the ambiguity of the risk-based approach, national regulators are coming out to put more detail behind that, but that's happening at a different pace, it's happening at a different speed, and at a different level of detail across countries. So I do hope that the Financial Action Task Force and its counterparts by region, so for example in the Caribbean Financial Action Task Force will spend more time kind of putting those details behind the expectations around how to manage high-risk customers.
Thank you. Let me shift gears somewhat here with you. We look at ways to mitigate the impacts of broad-based de-risking. It's important we consider the role I think of digital currencies can play in bringing marginalized regions safely back into the financial system, especially true for island nations where it's more challenging to move physical currency. One concern that is often brought up, I think incorrectly, is that cryptocurrency can't be part of the solution in this. And some will make arguments that crypto is a conduit for illegal activity. I disagree with the premise. Do you think crypto in particular presents an outside risk with respect to illicit finance?
So I disagree with that premise as well. Thank you for sharing that. I think that criminals are opportunistic. They'll go wherever they can manage loopholes, wherever they see gaps, and we see that they've been successfully utilizing all sorts of instruments globally, including the traditional financial sectors, and it's not a surprise that they're also using crypto and virtual asset space, non-fungible tokens as well to act. But what we've seen by and large is that because of the capability to trace illicit finance, we actually have eyes and ears on the ground, so to speak, as to where illicit financing is ongoing. The capabilities of pre-screening are really helping us understand where it's happening so we don't cash out. There's opportunities with crypto specifically that allow companies and centralized and exchanges that are regulated to stop transactions that they see are illegal and illicit. So
I agree with you that crypto provides opportunities to actually mitigate the impacts of de-risking.
Absolutely. Thank you.
Recognizing the time, Madam Chairwoman, I yield back.
Thank you. The gentlewoman from Massachusetts, Ms. Presley, who is also the Vice Chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Madam Chair. As the representative of the third largest Caribbean diaspora in the United States, this hearing really resonates deeply with the immigrant communities in my district, the Massachusetts 7th. Many of my constituents, many of my neighbors send remittances to their families in Haiti and throughout the Caribbean, which have really proven a lifeline amidst the financial hardships of the pandemic and, of course, global inflation as well. Remittances help working class families stay afloat when they need it the most and have demonstratively reduced poverty in several countries. Mr. Mowla, according to the Atlantic Council report, which you co-authored, the Caribbean has seen a decline in correspondent banking relationships since 2015, with the World Bank citing the region as the most severely affected by this phenomenon from a global perspective. As a result, remittances that my constituents send to their families have become more expensive if they are not denied or delayed entirely. Can you please expand upon how the decline in correspondent banking relationships is harming working class families in the region? I just wanted to build upon that question from my colleague, Congressman Meeks, earlier.
Thank you for the question. Mostly, as I mentioned to Congressman Meeks, is it supplements working class population's incomes. It's what people use, especially when there's job loss and poverty. I mean, we saw this with the pandemic, where 10 CARICOM countries are tourism-dependent economies. During the pandemic, tourism shut down, which meant that they were unable to go to work. Where were they able to get income to supplement that, to buy food, to purchase, to access healthcare, access education? It came from remittances. We see this in Haiti, we saw this in Jamaica. Now, pandemic was just 2-3 years still ongoing, but when we think about disasters, extreme weather events, remittances help. They help with taxes. They help across the board. At the same time, remittances, and when it's delayed, when it is much more costly, it affects the people that are in the U.S. itself. They are then going to be unable to send remittances, and they themselves, especially in Massachusetts and New York and Florida, who are already sort of living in sort of underserved communities, are going to have to pay more and more each time.
Thank you. And so, again, just building upon a little bit more. So for countries like Haiti and Jamaica, we know that remittances accounted for 20% of their GDP in 2020 alone. So if the decline in correspondent banking relationships continues, what will be the impact on these nations' economies?
Well, for countries like Jamaica, it's 20% of their GDP, but then you have sort of tourism that's about 25% of their GDP. So about almost half their GDP is being wiped out during the pandemic and when there's limited remittances. What happens is that when you have limited economic stability, it can create political instability. When people don't have jobs, when people are impoverished, they have to find other ways of making money. It can lead to sort of petty crime. If women and children are disproportionately affected, they can become victims of human trafficking. So it creates broad political instability. When you couple that with other factors such as climate change, such as energy insecurity, high food prices, it creates a very worrisome picture in the Caribbean, especially over the long term.
Yeah, worrisome, devastating. And so for a region disproportionately vulnerable to climate disasters and dependent on the tourism industry, finding a solution to this de-risking problem is really critical. Mr. Mowla, in the report you've co-authored, you list a number of possible solutions to this problem. Specifically, you discuss categorizing correspondent banking as critical market infrastructure due to the important role these relationships play in Caribbean economies. Can you elaborate how this categorization would increase access to financial services in the region?
Yes, so both in the US and globally, it would help identify correspondent banking as a global public good, as a human right, basically, as Prime Minister Mottley stated in the previous panel. Doing this will give added justification for international financial institutions to incorporate correspondent banking as critical market infrastructure in development packages and development finance and USAID assistance after extreme weather events. It helps also to sort of underscore the vulnerabilities that these countries are facing, even as high and middle income countries, allowing them another justification to be able to access concessional financing and blended finance as well.
Thank you, and thank you to our distinguished chair for this historic hearing. This is certainly an issue of critical economic, racial, and immigrant justice, and we can't sit idly by.
Thank you. The gentlewoman's time has expired. The gentlewoman from Texas, Ms. Garcia, who is also the vice chair of the subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and want to thank you for bringing this very important topic to the table. I too was on the trip with you when we visited Barbados and the Bahamas and started looking at this issue. And it's good to see the Prime Minister back. It's good to see so many of you that we met during that trip. And we hope that we can build on this and come to some solutions and some legislation that would be of assistance. So I wanted to start with Mr. Sherman, Mr. Shah, and Ms. Charette. Most of the correspondence banks are the largest financial institutions like your bank, Mr. Shah, Wells Fargo, and I was really pleased with the remarks you made earlier. And also, of course, we also included a Citibank and Bank of America. There are some small financial institutions offering services, but it's unusual. I would imagine it's because it's expensive to maintain the overseas staff, I think you all talked about during the forum, and branches and our branches, and because the anti-money laundering and sanctions compliance is expensive, I think the Prime Minister mentioned that. It is a good idea to facilitate the entry of more small and medium-sized financial institutions into corresponding banks. So do you think we need to do more of that, or what is it? What specifically do you think, Mr. Shah, we need to be doing to help to just get more banking in the Caribbean?
Well, when you look at some of the reasons outlined for banks leaving, there was largely three major reasons. The first one was that the Caribbean was now recognized as a high-risk jurisdiction for a multitude of reasons, and maybe the wrong perception. So that was the catalyst that basically said, if I'm going to be in a high-risk jurisdiction, it's easier for me to exit than to mitigate the risks. Because operating in that jurisdiction would require an immense amount of resources and investment. The second thing that a lot of the banks looked at is how well did the region itself respond to new legislation and the ability to mirror risk appetite with U.S. financial institution. So that was the second challenge. And when we talk about encouraging banks to go back in there, there's this notion, and everybody talks about it, the risk-based approach. So for a small or a medium-sized bank, their view on a risk-based approach to correspondent banking might be totally different from a bank that has a program equipped to manage correspondent banking risks. So I think small banks going in there need to be wary that they face the same challenges larger banks face.
Right. As you may recall that during the forum I mentioned that to me, just listening to all of you, it reminded me a lot of the challenges I have with bringing banks into my district, which is 77% Latino, very heavy Spanish language speakers, because banks are really not interested in having branches in some parts of Houston. You were sort of redlined. And similarly, it appears that you all have been redlined from the U.S. banking system. So to quote the Prime Minister, I do see you and I do hear you and I feel you. And I think we're committed to making some changes. And again, to focus on how similar it is, we don't want to duplicate in any changes, any of the exclusionary regulations. We need to be more and more about being inclusive. And I wanted to ask Ms. Delmar, can you be more specific about how de-risking practices impact remittance payments?
Certainly, as far as the cost of remittances goes, it is one of the major factors that impedes the ability to send monies back home to families. The other thing that we need to be mindful of is remittances forms part of the core of our existence in the Caribbean region. We have a number of families whose children go to school in the United States, and it is tantamount to their survival that we are able to transfer monies between the countries, between the jurisdictions. The cost of remittances at this stage is highly prohibitive, and it has a resultant impact on the overall operational expenses of the Caribbean banks, majority of which now are also indigenous banks, so they are small banks trying to find innovative ways of ensuring that they are able to service the populations. And so that is one of the critical areas. Of course, I'm happy to provide you a written report to provide a little bit more in-depth response, given the time constraints.
Right, thank you. Madam Chair, I'd like to introduce for the record a study that was made by the Texas Association of Businesses just this last year anti-money laundering regulation, correspondent banking, and the adverse economic impacts for the U.S.-Mexico bilateral relationship. Because, Madam Chair, as you know, this is not just the Caribbean, although that's our focus today. It impacts all of the Western Hemisphere and Latin American countries. So thank you again, Madam Chair, for your leadership on this issue. I look forward to working with you on your bill.
Thank you. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chair. Fossil fuels are essential for affordable energy here in the United States. Under President Trump, the United States achieved energy independence. According to the major accounting firm PricewaterhouseCoopers, the oil and natural gas industry supports 9.8 million jobs, which is 5.6% of total U.S. employment. Coal is a lifeline for West Virginia's economy. In the state that I'm blessed to represent, West Virginia, coal supports over 29,000 jobs. West Virginia is the second largest coal producer in the nation, accounting for 13% of the total U.S. coal production. Yet President Biden, as he did when he was vice president under Obama, has made it his mission to wage war on the fossil fuel industry. Some of his more objectionable nominees have openly called for banks to deny financing to fossil fuel companies. De-risking is when banks limit certain services or relationships with customers to avoid regulatory concerns or problems like money laundering. So, Ms. Shetret, the current administration has made its opinions on the fossil fuel industry very clear. Given your work on de-risking, especially in post-Operation Chokepoint world, can you explain the effects of de-risking of entire industries and what those effects can have on the United States and our competitiveness?
Thank you for the question. To be clear, sectoral de-risking is counter guidance and counter international standards. That is absolutely not the goal of regulation, and it's not the goal of the framework that's being touted. In fact, it's quite the opposite, a risk-based approach, case-by-case analysis, and so in blanketing sectors, we're actually shooting ourselves in the foot, so to speak. And we spoke about the concept of re-risking, where if we do ultimately de-risk entire sectors, what happens is that risk goes elsewhere. It goes, it's re-risked into potentially smaller businesses or smaller financial institutions that can't manage the compliance burdens that come with that, or it might go into Chinese counterparts, wherever it might go. The challenge is that the risk does not disappear, and that's the bottom line, and we run the risk of doing that by eliminating sectors altogether.
Thank you. I mean, the point I'm making here is that everything we're hearing from our witnesses today about the effects of de-risking in the Caribbean can also be said about this current administration's approach towards fossil fuels. For example, Ms. Delmar, you stated, quote, de-risking activity perpetuates the perception of the region as a high-risk jurisdiction, which in turn has an adverse effect on investor appetite, close quotes. The same holds true in the United States. The Biden administration seeks to negatively affect investor appetite and steer capital away from fossil fuel companies while killing millions of American jobs. It is critical that we do not abandon the fossil fuel industry in this country. The so-called Inflation Reduction Act raises taxes on West Virginia's coal industry to provide subsidies for electric vehicles in big cities. That is devastating to West Virginia workers while doing nothing to bring down energy costs. Thank you, Madam Chair, and I yield back.
Thank you. This is the Financial Services Committee, and the gentleman from Missouri, Mr. Cleaver, who is the chair of the Subcommittee on Housing, Community Development, and Insurance, is now recognized for 5 minutes on financial services issues.
Thank you, Madam Chair. Yeah, that's what I hope we would talk about today, but there's been digression. Let me just ask you, would it be of any value if the U.S. Department of the Treasury would work with Caribbean, the Caribbean Financial Action Task Force to help build a greater technical capacity?
Thank you for the question. Certainly, we believe that there is the opportunity to continue the dialogue so that we ensure that, the policies are reflective of what happens in the Caribbean islands and sets us apart from perhaps the rigorous nuances associated with these policies and legislations that are implemented in the U.S. One of the things that has to be considered in decision-making is the size and scale of the Caribbean islands and our ability to respond effectively and efficiently to the changes that we seek on a constant, ongoing basis around policy change. And so, yes, I believe it is something that we will be open to working with you to ensure that there are policies that are put in place that also take into consideration what makes the Caribbean, the third border to the U.S., small interconnected islands that are, to a large extent, in more instances than one, heavily reliant on the opportunities to trade with the U.S. to remain viable, vibrant economies.
Thank you. I was here with our chairwoman and increasingly very few others in the aftermath of the 2008 economic collapse. But it was infinitely easier for us through Dodd-Frank to deal with our entire system. Because all of the banks in the United States operate under the same laws and requirements. And, I'm just wondering, I've become a fan of USAID. I've seen what they've done all around the world, in Africa, for example, where I have many relatives, at least in Tanzania. And I'm thinking that I don't know how active USAID is in the Caribbean. I need to probably get an answer to that one first. Are you aware of USAID presence? And
Yeah, they are extremely important to disaster response, especially after hurricanes, as well as currently on food security production.
Yeah, they do a lot of that around the world. The point I'm trying to make is that USAID may be able to help build technical capacity in the Caribbean. I mean, when you list the things that you need most desperately, I'm assuming that for us to get rid of this red lining, I can't think of another, black lining, brown lining, whatever we're going to call it. But it would seem to me, if where that sits on your priority list, that maybe that ought to be a request from USAID, either from the task force or from this committee, to develop a program so that they can help build this technical capacity, but do so with some kind of standardized compliance requirements. To connect that with my Dodd-Frank analogy earlier.
I would say, and I suppose, sorry, from my perspective, the concern there for me would be whether or not this would be considered recognized by the regulators, the U.S. regulators specifically, noting that while we may build technical, it has to be done in conjunction with the U.S. regulators, of course, I would imagine, to ensure that it is identified, it is recognized as acceptable, so that we are re-onboarded in some instances and are able to establish relationships. And I say that in the context that the Caribbean has consistently, from 2015 up until present day, spent inordinate amounts of money trying to figure out what are the challenges specifically, why are we consistently being faced with the issues of de-risking, and to date we find that the conversation keeps changing in terms of what should we do. And all of these things are capital intensive for us.
But wouldn't it be better if we had standardized compliance?
Yes, absolutely.
And maybe that's one of the requests we need to make of USAID. My time has run out. I'm very much interested in this particular spot. Thank you, Madam Chair.
You're welcome. The gentleman from Massachusetts, Mr. Auchincloss, who is also the vice chair of the full committee, is now recognized for 5 minutes.
Madam Chair, I appreciate you hosting this hearing. It's been educational for me. My questions are for Ms. Shetret on stablecoins usage for correspondent banking. You said in page 4 of your written testimony in a section entitled Innovation and Technological Solutions to De-risking that Congress should explore legislation to facilitate the acceleration of digital dollars. And you described that CBDCs have a high adoption rate in the Caribbean, with 8 countries fully deploying one, and that the US develops our own digital dollar, it should be interoperable with other nations' CBDCs. Now, I'm a committed CBDC skeptic in terms of the United States and the Federal Reserve's, 1, statutory authority to do it without getting Congress's approval, and 2, the necessity of it here in the United States when we have a flourishing ecosystem of private stablecoin issuers. Can you describe whether you see any particular need for it to be a CBDC that would be interoperable with Caribbean CBDCs, or whether if we mandated interoperability for private stablecoin issuers here in the United States, that would fulfill the same end state?
Thank you for the question. I think it's the latter piece that's important here. It's the interoperability piece of integrating into economic blocks. I think the concern, whether it is a CBDC or a stablecoin, is isolationism and creating a closed loop in which there is no way to conduct trade, to conduct transaction monitoring, and to be able to have visibility into risk and properly risk manage. So I think the suggestion and the proposal is to essentially make sure that whichever direction we take, that interoperability with the Caribbean and globally is considered front and center.
Agreed. And surfing on the comments from my friend from Ohio, Mr. Gonzalez, the stablecoin has tremendous potential to amplify the U.S. dollar as the world's reserve currency, which has been a huge source of strength for us since really World War II. I want to give you the floor for maybe 30 seconds to a minute, as well as any of your fellow witnesses who want to jump in here, just about how stablecoins, let's imagine that we have a scenario where stablecoins are interoperable and are properly collateralized, both in the Caribbean and the United States, how they might assist with correspondent banking or the facilitation of remittances.
So the first piece about stablecoins I'd like to emphasize is the power of financial inclusion. It enhances the opportunity for accessibility to services that at the moment the unbanked or the debanked don't have access to, and that's a huge win. We, with correspondent bank de-risking, have created an exclusionary barrier that stablecoins will allow us to overcome. I think the other piece that comes with that is that, again, it allows us to do anti-money laundering, counterterrorism finance, transaction monitoring, customer due diligence, all the things that we need to be doing more efficiently, more effectively. It's faster, it's potentially cheaper if we leverage technology properly. So I think I'll allow other colleagues to share views, but that would be my bottom line.
Yeah, I'll just add a couple things. I agree entirely with what Liad has just said. The underlying technology that facilitates stablecoin provides, through its attributes, the immutability of ledgers, the traceability of transactions, and much of the sector, and I believe that it is very additive to the broader financial services economy insofar as both inclusion metrics as for direct access, as well as to alleviate leakage, waste, fraud, and abuse, because, again, the underlying technology provides some of those capabilities from an anti-money laundering perspective as well.
Mr. Shah or Ms. Delmar, do you want to jump in about the ability of stablecoins or the underlying technology to assist or augment correspondent banking?
When you look at some of the major risks, the actual mode of transmission of transactions is not really the number one issue. Ultimate beneficial ownership, figuring out who you're doing business with, the type of transactions, who you bank, who you choose not to bank. Those are some of the things that still continue to remain challenges, regardless of whether you use hard currency or digital currency.
Yeah, and I'm also inclined to agree with Mr. Shah's perspective that we would need to do a bit more investigation into ensuring that if this becomes the option or an opportunity, that it actually addresses the issues posed by correspondent banking.
It's not a solution in search of a problem, in other words, and as I fear that the US CBDC would be. Thank you, and Madam Chair, I yield back.
Thank you very much. I am so pleased that Prime Minister Mottley came today and she not only set set the stage for, but participated with us being able to move forward with a discussion that this panel has helped to illuminate. I do believe that we face the issues, that the discussion was well thought through and well presented by all of you on the second panel, and I'm very optimistic. As a matter of fact, I think I almost joined with someone on the opposite side of the aisle in ways that I never thought I would to deal with this issue. And so I want to thank you, second panel, for being here, the time that you have spent. And with that, without objection, first I'd like, of course, to say that we are absolutely, again, thank you for your testimony today, and without objection, all of our members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. So I ask our witnesses to please respond as promptly as you are able. So without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. The hearing is now adjourned. Thank you.